in a soft landing right now. We're looking at the data. The data looks strong.
Look at the data. It continues to surprise to the upside.
That even if the activity side of the economy is doing well, as it is, it's really the deceleration in inflation.
It's actually not that easy to get inflation down that quickly. It's going to take more time.
As we get into this year, I think a big stepping back thing is that we're going to see what kind of economy we have.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance alongside Lisa Abramowicz. Together with Annmarie Hordern, I'm Jonathan Ferro. 4 days of gains on the S&P 500, 3 consecutive all-time highs. Breaking news overnight, Trump on the cusp of clinching the GOP nomination. The votes going his way in New Hampshire. 91% of the ballots counted. Here are the numbers. For Haley, 43.2. Bramo for Trump, 54.5.
This is completely expected. Let's just put that out there. Everyone expected Trump to probably win. The question now is, does Nikki Haley drop out, given that she had a pretty victorious losing speech while we heard from Donald Trump a sort of fiery, angry winning speech? So here's the question. What's next, and what is Nikki Haley's role if she basically has no path to become the nominee?
Well, she came out and she said New Hampshire is the first in the nation. It's not in the last. She has some money before New Hampshire even started to spend in South Carolina. But if you look at the South Carolina polls, it looks like she is going to be embarrassed in her home state. So there is this potential, but she also might just want to hang around if for some reason Trump could not run in November.
Okay,
She got some delegates last night.
This, to me, is one of the most interesting aspects of all of this, the hope and the dream that it's something other than just a matchup between Biden and Trump. I just want to point this out. With more than 3/4 of the vote in, more than 2 in 5 voters voted for someone other than Biden and Trump. People don't want this matchup based on the voters. So the question is, what could interrupt that?
They don't want that matchup. What Joe Biden is going to say when it comes November, he's going to say what his father has always told him. Joey, don't compare yourself to the almighty. Compare me to the alternative. And that is the Democrat hope. People will get into that voting booth, hold their nose, and once again vote for Joe Biden instead of Donald Trump.
Is that the pitch from Joe Biden? Is that what he's
Not
going to say?
officially.
Joey? It certainly sounded like Joe Biden. That was a decent impersonation. If politicians, if we're down to 2 and the electorate's deeply unhappy, dissatisfied, Bramo, markets right now don't care. Equity futures are positive again on the S&P 500. Check out shares of Netflix, juicing the move higher in after hours. These numbers, the best quarter of sub-growth since the pandemic. They beat projections in every region of the world. The ad-supported tiers picking up. Bramo, the password clampdown is paying off. We're up by 9.6%.
People are wondering, is there anything underneath this incredible rally that we've seen in the Magnificent Seven, and we're seeing inflows into it? Here's the thing, the profits are there. They're able to deliver. And you could say Netflix, whether it was content, we heard that yesterday, whether it's just the fact that they have such a critical mass and everybody's tied to their phones, but the fact that they were able to add the greatest number of subscribers to the heart of the pandemic, when all of us were looking for any screen possible to potentially hook our kids onto so that we could have.
Do you know what's under it? At least what I think is under it? David Beckham. That documentary came out the last quarter. Even my parents sat down, watched it, and then my mom said, I'm going to get a Netflix account. She's not going to try to get on my password sharing. She got her own Netflix account. That documentary, honestly, fantastic.
Up by 9% this morning in the pre-market, at least for now. Down to David Beckham, as apparently, according to AMH this morning.
And Victoria.
The broader market on the S&P 500 is shaping up as follows. Equity futures look like this. We are positive, Lisa, by, let's call it 21 points on the S&P, up by 0.4%. Yields coming in 3 basis points. On a 10-year in America, 4.10. I have to tell you, the JGB market looks very, very different to what you see in treasuries today. Yields up in Japan. We're talking about rate hikes all over again.
People are expecting them to actually make that move, and we heard that with the Bank of Japan, maybe indicating they were prepared to shift some of their strategy. But here's the thing: people have been expecting this a long time. I think the sort of common feeling is April is when they're going to abandon negative rate policy, and so maybe you'll get some kind of action in JGBs.
Coming up in the hour on this program, this is the lineup for you. Chris Marangi of Gabelli Funds on the market rally, Bloomberg's Kelly Lyons on Trump's decisive victory in New Hampshire, and Mandeep Singh of Bloomberg Intelligence on tech earnings. All of that still to come. We begin with our top story this morning. The stock market rally continues with tech earnings underway. Netflix posting its biggest subscriber gain since the pandemic. Chris Marangi of Gabelli Funds saying the pressure is growing for media to merge and compete. Writing, quote, the march from analog dollars to digital dimes continues. Media's industry structure will never be as favourable as in decades past. Chris Marangi, co-CIO of Gabelli Funds, joins us around the table. Morning, Chris.
Morning.
Is it going to be bad for industry and bad for consumers too?
Well, I don't know how it shakes out for consumers. we're going to need consolidation. Netflix, the quarter that they put up, shows that scale matters. We used to talk about the insurgents versus the incumbents. Netflix is now an incumbent. They're clearly the global leader in streaming, and they are able to flex that muscle and adding subscribers and doing the deal that they did yesterday with Raw. And the rest of the industry, the former incumbents, are going to need to follow.
So does this mean that you expect Netflix to acquire someone?
Well, clearly, they didn't need to say it, but they said in their letter yesterday that they don't intend to acquire any linear programming companies. That's not a surprise. They're not going to do that. They're going to add content. But it's really the former incumbents, the linear companies, are probably going to need to rationalize the mess of streaming services that we have out there. And that can happen through consolidation. That can also happen through partnerships.
Okay, so let's just sort of break this down from your investor hat. Where do you lean in and where do you lean out? How do you play this if disruption could potentially be really profitable?
Well, first and foremost, we like the IP owners, those who own the content themselves. And those are hard to find. One place we found them is in sports. The owners of sports properties, demonstrated again by the WWE deal yesterday. This is the content that people want to watch, that advertisers will pay for. And so that's first. Second, we're looking for some of the undervalued media companies. I mean, you look at Warner Brothers Discovery or even Paramount. Netflix today is added the entire enterprise value of Paramount, which is $22 billion.
Can we pick up on the sports deal first?
Please.
And get to sports. It's tough for the media companies when they have to lease the asset and they don't own it. ESPN is clearly a struggle right now. Disney doesn't seem to know what to do with it based on the last 10 years or so. What does that look like in years to come? They've paid up big time for some of these assets. They don't own them. Are we getting to the point where maybe we've reached the limit on the price of that asset?
Well, again, Netflix paying $5 billion over 10 years for WWE, which is arguably a sport, well, arguably not.
Kind of.
I think is an indication that sports rights values are continuing to go up, and they're going to go up. And you have the tech companies are going to be players. I think you're going to have the leagues as players too. MLB, I think, has a vision of owning some of the streaming services themselves. Perhaps the NFL or somebody else gets involved in ESPN. We'll see. But I would expect the big tech dollars to start flowing.
Can I just set the record straight? There's no way that WWE is a sport, because when you have a predetermined outcome, it is pure entertainment. I just want to say that. So just set the record straight.
You haven't been involving soccer closely enough, apparently.
I will say, though, when you look forward at exactly how this evolves, how do you understand whether you're really investing in a company for the quality, for content spend? Remember, everyone was worried about too much content spending versus sort of the winner-take-all kind of thesis.
Well, again, it all comes down to price and what do you pay. Netflix, obviously, is a phenomenal company. They're going to have tremendous growth over the next few years. It's trading at 30 times EBITDA, something like that. Is that a price that you want to pay? Is there a margin of safety to be able to own Netflix at these prices? For somebody like us, that's hard to do. Warner Brothers, Paramount both have their challenges. They're trading at, call it 5 or 6 times EBITDA. And so there's a lot of opportunity if they're able to get the model right. So that's the balance that we weigh.
Will we see more of sports teams or venues take on the distribution like MSG or Yes? And then it goes to the fact that the sports team needs to be pretty relevant and popular for that to even work.
Yeah, and again, you're seeing signs of that. You had in baseball and basketball, Diamond Sports go through bankruptcy. Amazon is potentially investing, recapitalizing that. So, I think that the teams are certainly interested in viewership and gathering eyeballs and in making money, and perhaps that means taking ownership stake in the media rights.
Could potentially Netflix ever be one of those destinations?
Well, interestingly, Netflix talked about being in sports-adjacent properties, not sports properties. And I think they put that in there specifically to note that they're probably not going to be a bidder on the next big media sports property, which is the NBA later this year.
You mentioned this at the start of the conversation. Let's try and finish there. Are we building a model that consumers dislike and companies struggle to make money with?
I don't know. Are consumers happy today? There's more content than ever before.
I'll speak for myself.
It's harder to find.
I'm deeply dissatisfied that I have about 8 different apps and I'm paying $10 for each of them.
And the industry is very well aware of that, and I think there are ways to fix it, including consolidating streaming services, also bundling streaming services. We're going to have a reaggregation led by the cable companies, where you, as part of your broadband service with Comcast or Charter, you get a box that puts all this stuff together.
Back to a bundle.
Yeah.
Back to the bundle. Bramo, back to the future.
This is basically what we heard, right? What's the new model? It's the old model. And that's where we're heading. And that's what everybody has been saying for the past, 18 months.
Any idea of what the price point on that looks like?
Well, it's probably cheaper than the big bundle, but not as cheap as you think it would be.
So the broadband providers are going to be the ultimate winners, and they're going to have to consolidate the whole thing.
Well, the broadband, we've always talked about the broadband hedge, which is you need broadband to do any of this.
Sure.
And in most of the country, that was the cable company. Over the last 18 months or so, you've seen wireless take share, and that's been the issue with the cable companies. Comcast reports tomorrow. We'll see how many subscribers they lose to the fixed wireless operators.
And Netflix this morning up big time in the pre-market. Chris Marangi of Gabelli Funds is going to be sticking with us. Your equity market on the S&P 500 right now positive by 0.5%. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hey, John. Former President Donald Trump has taken a decisive win in the New Hampshire primary, all but guaranteeing a 2024 rematch with President Joe Biden. Trump took 55% of GOP primary votes, with 75% of ballots counted, comfortably beating his only remaining challenger, Nikki Haley. The former UN ambassador has vowed to stay in the race and now looks to her home state of South Carolina for support in the February 3rd primary. Chip maker ASML saw orders more than triple in the fourth quarter. Demand for products from Europe's most valuable tech company increased, especially for its state-of-the-art lithography machines. CEO Peter Wennink emphasizing the company's role in the AI frenzy.
One thing is absolutely sure. It's going to need massive amounts of compute power and storage, data storage. So I think without ASML, without our technology, that's not going to happen. So it's very clear that it's going to be a big driver going forward for our business and the business of our customers.
And Europe's top economies are seeing a tough start to 2024. PMI data shows private sector activity contracted for an 8th month, with Germany and France in particular seeing bleak results. The data comes a week before the euro area is set to report GDP, which will likely show recession. Meanwhile, UK PMI data shows inflation worries have returned thanks to the conflict in the Red Sea. Private sector firms reported the sharpest jump in costs in 5 months. That's your Bloomberg Brief. John?
Yahara, thank you. Coming up next on this program, Trump cruising towards a rematch with President Biden.
This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night.
This race is far from over. There are dozens of states left to go.
That's coming up next on the program, live from New York City this morning. Good morning.
When will the ECB decide to cut rates?
We are on the right path, but I'm not going to shout victory.
Bloomberg Television brings you the breaking news and detailed analysis after ECB President Christine Lagarde's press conference.
The wages issue is what I think the ECB is really focused on.
June is our base case.
There is still a 50-50 chance of a rate cut coming just slightly before that.
In many ways, they should have been cutting already early to stimulate growth.
The ECB decides. Thursday on Bloomberg Television.
Live from New York City, here's the price action on the S&P, higher again by 0.5% on a 4-day winning streak on the S&P 500, the longest winning streak of the year so far. Yields lower by 2 basis points on a 10-year, 4, 10, 51. Under surveillance this morning, Trump cruising towards a rematch with President Biden.
You know, we won New Hampshire 3 times now, 3. This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night.
New Hampshire is first in the nation. It is not the last in the nation. This race is far from over. There are dozens of states left to go.
Here's the latest this morning. The former president defeating Nikki Haley in the New Hampshire primary. Trump claiming victory by 11 points with over 90% of ballots counted. Haley trailing by over 30 points in polls heading into the primary in her home state, Annmarie, of South Carolina next month.
Yeah, it's pretty rough when you look at this polling, Jonathan. We put the aggregate together with 538. Trump is averaging 62.2%. Haley is averaging 25% heading into what she said her sweet home state of South Carolina. And then you look at the endorsements in South Carolina, whether it's the governor, lawmakers in Congress, or statewide officials. Donald Trump has 13 in his camp. She has 1.
Steep hill to climb. Kelly Lyles joins us now from Manchester, New Hampshire. Kelly, let's talk about that. What's the argument for Nikki Haley to stay in the race?
Well, what Nikki Haley will tell you, John, is that South Carolina is her home state, that she intends, with the ample resources at her disposal, to put up a good fight there, and that actually, looking beyond that South Carolina primary on February 24th to Super Tuesday, that we should all keep in mind 11 of those 16 states and territories that vote on that day have open or semi-open primaries. The thinking being she could potentially attract independent, maybe former Democratic votes in those states. The thing is, in New Hampshire last night, where the base of voters is significantly more independent and moderate, 40% of those registered here were undeclared voters. She couldn't get it done. So how could she get it done in these other states, especially in light of what could be intensifying pressure on her to drop out of this race, not just from the MAGA base that, of course, is very present in South Carolina. She could face a lot of attacks from Trump and his allies, but even establishment Republicans are now lining up to say we should all fall in line behind the presumptive, at this point, nominee Donald Trump. Big leaders in the Senate, for example, in addition, of course, to the other endorsements that Trump has gotten from previous candidates in this race, like Senator Tim Scott of South Carolina. So it definitely is going to be an uphill climb, and a lot of it could depend on whether or not big money donors continue to back her. Keep in mind, guys, 4 days from now, where you are in New York City, a big fundraiser is going to be had for Haley, held by the likes of Ken Langone and Stanley Druckenmiller. To this point, a lot of these big Wall Street donors have still been backing her. The question is, will they continue to throw good money after potentially bad if she continues to languish behind Trump in polls in future contests?
Yeah, we'll have to see if the donor class continues to shore her up following this loss in New Hampshire. But Kayleigh, as we look to this general election, the one that Lisa continues to say, it's the one that no American really wants, according to the polls, the Biden campaign last night issued a statement that seemingly felt like they were eager for it to be Trump.
Well, and that's what we thought all along, that actually of all of these different Republican candidates, of course, now there's only two left, that Trump was the preferred outcome for the Biden campaign because Biden has beat him before. He did so in 2020, and at least the campaign believes that he has the ability to do it again. Biden put out a statement last night saying that it's clear that Trump is going to be the Republican nominee. He said his message to the country is that the stakes could not be higher. Our democracy, our personal freedoms are all at stake. And that really is how he is trying to characterize this race moving forward, as something fundamentally about the future of American democracy and the threat that he says Donald Trump poses to it. Keep in mind, though, guys, that in the states that ultimately could decide this election, when we're looking at the Electoral College, it's the swing states that are going to matter. And in most, if not all of those, when you look across polling, Trump is currently leading Biden in them. Of course, it's a long way to go. This would be one of the longest, if not the longest, general elections in history, if really it does begin now. The vote is still more than 9 months away. But really, Biden is hoping that it is going to be a rematch with Trump here.
Haley, I have to wonder, there's a lot going on, or should be going on, down in Washington, D.C. amid this sort of drumbeat to November. And there's a question of whether we're going to get budgets passed, about funding to some of our allies. I'm curious, Kayleigh, what the increasing acrimony, both with respect to this race, but also in the House, and the Senate, frankly, how Donald Trump becoming the leader now really plays into that.
Well, he already has been the de facto leader of the Republican Party, if you will, as he has remained not just a former president, but really the leader and the presumptive frontrunner and ultimate nominee. But the real issue in Congress that translates into this election is on border security. Here in New Hampshire, as we saw in Iowa last week, in addition to the economy being top of mind for voters, the border was top of mind as well. And we know that the White House and Senate negotiators are still currently working on a package to try to tie Ukraine funding to a border security deal. The question is going to be what the fate of that is in the House, whether or not House lawmakers, of course, led by House Speaker Mike Johnson, who talks frequently to President Trump, has a very close relationship with him, are going to pass a bill that could potentially be a political win for Biden, knowing that he has a problem at the southern border. He doesn't poll well on that issue. If he actually were to be seen getting legislation across the line to try to address that issue, it could actually play in his favor and against the favor of the former president. So as this election draws closer and closer, it may be more difficult for Republicans to actually be handing the White House those kind of political wins. And we know that Trump already has weighed in on this. He posted on True Social last week that House Republicans should only accept a perfect border deal. And we'll be looking to see whether he continues to put that pressure on so that they don't ultimately get this done.
Hey, Kayleigh, thanks for the update. Kenny Lyons there in New Hampshire. With us around the table here in New York City, Chris Marangi of Gabelli Funds. Chris, political risk, something we all hear about, struggle to quantify and then attempt to ignore. What do you do with it in 2024?
Well, I think the question is, when does Wall Street care? And arguably in 2016, Wall Street didn't care until election night, when famously, futures sold off and then we had liftoff the day after. I think there's two parts here. There's the actual conduct of the election. Are we going to have a concession speech the day after? Or is this going to be another extended affair? And then there's the policy risk and what policies are going to change. We're already seeing some ink spilled about what happens to the Biden IRA. I think if you're an investment banker or sitting in a boardroom, you're wondering, if I want to do a deal, do I attempt one now under Lina Khan, or do I wait for perhaps more friendly Trump administration? So these are all things that we're thinking about. But yeah, I think Wall Street for the moment has enough on its plate. Just going to ignore this.
Let's do some scenario analysis and go through it together. We all remember that night in 2016. I was on air when the headlines were crossing on the Bloomberg terminal, and you started to see futures bounce. And futures started to bounce on that speech by President Donald Trump when he started to talk about infrastructure spending. That was the very beginning of what became the Trump trade over the next couple of months. We started to focus on the policy and not the volatility that comes with the man. Is it different this time around?
Well, I think it is different because we have two known quantities, if they're the presumptive nominees. I think the knee-jerk reaction from the market will be positive toward Trump, with the belief that he will bring more pro-growth tax and regulatory policies. The reality is clearly going to be more complicated, but I'm not sure we get to that in November. That's probably more like a January type event.
Before we get to November, I am curious about whether you expect deal-making to accelerate or decelerate because of the uncertainty.
Yeah, well, we've seen an acceleration of deals. We've seen a lot of deals across a wide variety of industries in these first 3 weeks of the year. They tended to be small, made a lot of sense. Some of that is, I think, just pent-up deal demand as the financing markets have loosened up a little bit. We have a little bit more certainty on inflation and cost. So I think that backlog has to clear. But I don't know that anybody's going to attempt a really big deal before the election, because if you announce it today, it's probably not getting approved in time for the election to occur.
So investors may shrug off political risk in the United States at the moment. What about geopolitical risk? Every single day there is an issue in the Red Sea, and at some point this is feeding into corporate bottom lines.
It is, and obviously the domestic and international inextricably linked. If you believed President Trump, he'd suggest that he would settle Ukraine the day after he gets elected. We can all question whether that's true or not, and what the impact of that would be.
We hope it's that easy.
Yeah.
Suspect it's not.
I would agree. But how does that translate into prices? I'm not sure. Obviously, there's a lot of focus on the Middle East because it is the source of so much of the world's energy. The Red Sea, obviously, a major trade route, especially important to Europe, and this is going to increase costs and increase supply chain costs, which are now only normalizing, according to companies we're hearing on Q4 earnings calls.
Hey, Chris, thanks for being with us this morning. Appreciate it. Chris Marangi there of Gabelli Funds. Just want to check in on shares of Netflix in the pre-market, higher by something like 9 to 10% through most of this morning, following some blowout numbers. We're up by 9.9%. Plenty of reaction on the street here, Bramo. Mark Mahaney of Evercore saying 4Q profits were materially better than already high expectations, outperforming the stock. Price target 600 from 500. We're at 540.80 this morning.
The secret is that people are going to pay rather than have the service stripped away from them. And to me, that has been basically the unknown. A lot of people thought there would be a lot of cancellations with the password crackdowns. It turns out people might be unhappy. A Jonathan Ferro, who has to pay for 15 different services and struggle to find anything, might gripe about it, but they're still paying for it. And that's ultimately what they're cashing in on.
Yeah, there's three types of consumers. People who don't want to touch any of this, people who sign up, then sign back out, people like me, the idiots that provide all the money to them, who sign up for the services, then forget about them, never cancel and use them maybe once a quarter.
I hate this. I hate signing up for a service because I feel like I'm wedded to it. I feel like there's no way I'm going to actually have the patience or time to go find exactly how to cancel it. And I think they're banking on that.
I signed up for Paramount just to watch the Italian football. I can't remember the last time I watched a game on there.
I also signed out for Paramount because Juventus was playing and Jonathan called me and said, this is worth the whatever fee it was, and I still haven't canceled it.
And you're still signed up and paying for the service.
You should actually be paying for that.
Yeah,
I should take royalties from Paramount.
100%.
That's what should be happening here. Coming up on the programme, tech earnings underway with Tesla and IBM reporting after the bell. From New York City this morning, good morning. You're watching Bloomberg Surveillance. Four days of gains on the S&P 500, longest winning streak since the end of December. Equity futures right now look like this, positive again. All-time highs on the S&P and the Nasdaq. We had some weight to it, up by 0.4% on the S&P 500. On the Nasdaq, up by 0.6, call it 0.7. We'll talk about Netflix a little bit later. Lots of earnings, Bramo. AT&T just dropping.
Yeah, and I got to say, Chris Marangi talking about how cable providers are going to take all. Well, maybe not yet. AT&T seeing a lower than expected earning per share for this year. The range being $2.15 to $2.25 versus the estimate of $2.44. Talking about revenue growth on the broadband side, about 7%. Going forward. I'm just curious when we see them start to consolidate some of the sexier parts of the business, like cable and content and all of those things, rather than just, the sort of boring, okay, I've got to pay my bill for the wireless and broadband. So, is that going to sort of transpire and elevate them to the next post-utility existence?
Stock is down by about 1% in the pre-market. Let's turn to the bond market just quickly. 2-year, 10-year, 30-year, shaping up as follows. Yields coming in a full 4 or 5 basis points on a 2-year at 432.21. On a 10-year, we're down about 2 here, Bramo, to 410.51. I mentioned what was developing in Japan. JG bill yields are higher. Yields here in America are lower.
That's been the story always, right? That the divergence, that Japan is just basically in a world of their own. I will say yesterday, Jim Bullard, the former head of the St. Louis Federal Reserve, came out and said that he could see the Fed cutting in March and talked about cutting rates more aggressively because there was a sort of window before the core inflation gets down to 2%. So a real push-pull here. And you're seeing expected March rate cut bets come up just a touch.
I'm pleased you brought up the difference between the BOJ and the Federal Reserve. So now we're talking about rate cuts at the Federal Reserve. We're talking about hikes at the BOJ. After we talked about hikes at the Federal Reserve and the BOJ doing nothing.
They like to dance to their own music.
Isn't that amazing?
Well, yeah, and here's the key. Is the Fed giving them a window to hike rates? That essentially they won't blow out their currency to such a degree in terms of strength that it could really offset some of the gains. Honestly, a lot of people are expecting this. The question is just how they're going to do it in a less disruptive way. Remember 2 years ago, we were saying this was going to be Armageddon for markets. I know I'm using that word again. But,
yeah, no, sure.
And people were saying it's going to really be disruptive. It wasn't. It hasn't been. And now people are expecting maybe even in April abandonment of
I think I called it Operation Ostrich, didn't I?
I love that
BOJ,
phrase, yes.
head in the sand, head in the sand, and it's worked out. So far.
Maybe Operation Ostrich is the way to go.
So far. A week away from a Federal Reserve decision, just a couple of days away, in fact 24 hours away from an ECB decision. Here's the FX market in the euro specifically against the dollar. The euro positive by a third of 1%, 108.93. Under surveillance this morning, former President Donald Trump taking another step towards a rematch with President Joe Biden. Trump easily defeating former UN Ambassador Nikki Haley in New Hampshire, posting back-to-back wins after cruising to victory in Iowa. Haley vowing to remain in the race, but options for her campaign and anti-Trump Republicans are running out. AMH, you've had a few hours to chew over the numbers. What jumps out to you?
Well, what jumps out to me is that it wasn't as bad for Haley as the polls were expecting, but at the same time, he is really consolidating his lead. It's back-to-back wins, as you mentioned, Iowa and New Hampshire, and it looks like it's going to be the general election rematch that most of Americans in polls don't want, and that's Trump versus Biden.
So there are two things. Number one, what's the point of Nikki Haley staying in? And a lot of people are thinking about this seriously in terms of, is this just basically a play that if Trump's legal issues become too onerous, that she can somehow take the helm? The other question is dissent among both parties. What happens if it is an unpopular election? And then from an investor standpoint, how do you arrange around this? We just heard from Chris Marangi. People aren't expecting to do big deals because how do you do a deal that's not going to close before a really uncertain election?
And you might get an easier regulator in the next 12 months as well. Correct. I think we are learning something, though, AMH. I'd love your view on this. Where independents are leaning, where they aren't leaning, and what this could mean for the former president on the national stage in the next 10 months.
Independents were certainly leaning towards Nikki Haley. So this goes to show that, does Trump have a problem when it comes to the general election? I was also caught by the Biden campaign statement last night. This is what they said. Donald Trump is headed straight into a general election matchup where he'll face the only person to have ever beaten him at the ballot box, Joe Biden. There's only two people who have ever faced off Donald Trump in a general election, and that was Clinton and Biden. So that's their pitch.
Yeah, I mean, facts aren't popular in politics these days, are they? That's like kind of it at the moment. Let's turn to China, get some facts out of China for you. Authorities over there making another attempt to boost the economy. The country's central bank announcing a cut to the reserve requirement ratio by 50 basis points. The move becomes official next month in an attempt to free up lending and cash to the economy. China's government also mulling a $278 billion rescue package to backstop stock markets as growth worries continue. This is becoming an issue. We're talking about the plunge protection team for the equity market, the central bank coming out and saying we'll ease the supply of credit into next month as well. And you just get the feeling, Lisa, this is the beginning of it. It's not the end.
I don't really understand what the goal is, though, because right now, are they trying to ignite lending? The problem is demand for loans. It's not necessarily the actual rate, because rates are incredibly low. Are they trying to encourage international investors to come in? They also overnight recommended or basically banned certain transactions in onshore funds that had offshore kinds of accounts. At what point does this have the opposite effect of attracting international flows? If policy is just that uncertain and, frankly, that controlling and not sort of according to at least a U.S. version of a capitalistic economy.
Alicia Levine put it perfectly earlier this week. She said capital goes to where it's treated best, and right now that's in Netflix stock. That stock looks like this in the pre-market, surging. Trading in pre-market trading after reporting its best quarter of growth since the pandemic. Over 13 million customers signed up in the last quarter of 2023 thanks to a cheaper ad-supported version and a crackdown on password sharing. The company's guidance warning more price hikes are on the way, saying, quote, as we invest in and improve Netflix, we'll occasionally ask our members to pay a little extra to reflect those improvements. We're up by almost 11%, Bramo.
Honestly, it's basically the new tax of capitalism. I will just say this. When you sign up for something and then it's automatically paid, you don't think about it. So they could jack up the price $2 a month, and you don't think about it. You just pay. I wonder how much that's part of this whole dynamic. We're going to ask our clients, our customers to pay a little bit more. Yeah, they're going to kick up the price, and everybody's just automatically going to pay that, and that seems to be the tax.
Make it sound like a charity, you know.
No, exactly.
You know, contribute a little bit more. You're enjoying the product so much.
But it's not bad, at least if they have good content. As to our guest yesterday, content really is king when it comes to Netflix. They have a huge library compared to everyone else. And you look at that churn rate, people keep on to Netflix, hold on to that, versus all the others.
I guess that's really the key question, which is when do they drop the others, given the fact that at some point it's going to become onerous. How much is the bundle now if you put it together?
My bundle is
$300
more than the cable bundle.
Of course it is.
Let's put it that way. I think I'm going to have a spring clean, go through all the apps a little bit later.
What are you going to get rid of?
You want me to say this on air?
Yeah.
Apple, if we still got it, I'm not sure if we have. That can go.
Okay.
That can go.
Good to know.
A Paramount, I know I've still got that. Maybe that can go as well.
All right.
Hulu gives me the Disney Plus ESPN bundle, so it's hard to sort of like separate all of that. But Hulu's got so expensive.
Yeah.
It's got ridiculously expensive. I'm paying an absolute fortune for that now. Plus you pay for the broadband connection as well. You're looking at 200 plus, whereas cable all in with broadband costs what, 120, 150?
Correct.
Before, which is what you're still doing.
No, I'm doing it all.
I can always get the sense when you're looking down at what I'm doing. Like, you know,
no, I'm actually not. I probably pay
Okay.
stupid amounts, and I need to go through too.
Let's turn to tech earnings. Already kicking off. Tesla and IBM after the bout today. Tesla looking to deliver after losing pace among the Magnificent Seven in the rush to AI. Mandeep Singh, Senior Technology Analyst for Bloomberg Intelligence, joins us now. Mandeep, it's been a struggle for the EVs. We heard the news from Hertz in the last week. We saw what we heard from Ford just a few days ago as well. Mandeep, is it a struggle for Tesla as well, or are they different?
Well, so it's all about expectations. I mean, what Netflix did last night was a case of, low expectations and then kind of pulling the levers. In the case of Tesla, I would argue, expectations have come down, but clearly a lot is pinned on hope around AI and what they could do around robotaxis. And so far, they haven't given any concrete data points around, how they plan to monetize that business, except for the FSD charge of around $12,000 that you have to pay. And that's also a very low install base of consumers, the Tesla car users who have opted into that. So that's where, the top line growth continues to be much higher than the other OEMs, but that really the valuation multiple depends on the software and the robotaxi side of the business.
Mandeep, I got to say, Elon Musk overnight came out with a tweet basically saying that Tesla is an AI company with a car operation pinned on. How much is that going to be borne out in earnings? Essentially, if they disappoint with the car deliveries, they could still do well if they explain exactly how they are an artificial intelligence company and not one that just simply manufactures cars.
Yeah, and more so now with this wave of AI, the focus on large language models and how much data you need to train these models, it begs the question, Tesla already has about 5 million vehicles. They're about a $2 million run rate of new vehicles every year. So they could keep aggregating those miles, which you need to train the models. And we have the technology now with, these foundational models. So Tesla, in theory, should be leading the pack when it comes to autonomous driving, and they're the most committed. And they just need to articulate that in terms of how they are going to monetize it, and I think people will buy into that story.
The exact quote is, Tesla is an AI robotics company that appears to many to be a car company. Mandeep, BYD looming large over Elon Musk's head. And overnight, we heard from the executive from BYD, the Chinese EV car manufacturer, just basically amping up this competition. How much are the Chinese EV manufacturers eating Tesla's lunch in a material way?
Well, I look at it this way. Last year, Tesla's chargers were used by a lot of the OEMs who wanted to roll out EVs. And that, to me, is a validation that Tesla has the footprint now when it comes to being that early company around EVs and having the infrastructure. And let's say if other OEMs start licensing their software, the autonomous driving software, that will be another big validation. In the case of BYD, it's geographically limited, and I do think they don't have that infrastructure when it comes to charging stations and other kind of things that you need, for that mass adoption.
When you look at autonomous driving, Mark Gurman of Bloomberg is talking about Apple now. They wanted this truly driverless car. It seems that they're shrugging off those ambitions and now trying to bring an EV to market. What's going on there?
Well, so clearly, I think you're seeing different approaches from different OEMs. But in the case of Tesla, they have the lead, even though you could argue, level 5 autonomous driving is hard. And nobody thinks Tesla's current FSD software is level 5. They're more level 2 and 3. And that's where every OEM is right now struggling to come up with a strategy, and they haven't figured out what the best combination of sensors is, whether you need a LiDAR or you can just build a camera-based vision. And I think things will get pushed out when it comes to level 5 driving.
Mandeep, appreciate the update, sir. Mandeep Singh there of Bloomberg Intelligence on the earnings still to come. We'll hear from Tesla a little bit later. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara. Morning, Yahara.
Hi, John. Hamas officials have told international mediators they're open to releasing hostages in exchange for a month-long pause in fighting. Mediators are pushing for a phased approach that would start with civilians and end with soldiers. In return for a break in hostilities, the release of Palestinian prisoners, and more aid to Gaza. SAP will restructure its workforce to increase focus on artificial intelligence, affecting about 8,000 jobs.
We are investing in AI, over $1 billion for the next 2 years, while, of course, we're also applying AI internally. We actually expect that at the end of the year, we actually end up with the same headcount as we left 2023. And for the years to come, there will be investments, there will be headcount growth, but of course, under proportional to our top line growth.
The software company's shares surged on the announcement. Actor Ryan Gosling has pushed back on Barbie's mixed Oscar nominations. He's up for Best Supporting Actor, while co-star Margot Robbie and director Greta Gerwig were left out. Gosling writing, quote, "To say that I'm disappointed that they are not nominated in their respective categories would be an understatement." And that's your Bloomberg Brief. John?
Yahara, thank you. I'm not saying anything. Please, the floor is yours.
All right, I will just say this about Barbie. I know it's supposed to be about female empowerment, but the problem is that the men are the best characters. And I feel terrible saying this, but they're funny and they sort of like create the plot. You're shaking your head, but I think that there is this sort of underpinning of, it kind of is counterintuitive. And then, of course, if they get snubbed, people are making all sorts of...
I'm looking at Ryan Gosling's statement right now. There is no Ken without Barbie. How does Barbie get snubbed and Ken gets the award?
Is this why you're wearing pink today?
Is it? I'm actually not, but I'm so happy I did. Because I think it's, the subconscious.
Someone at the Oscars has got a dark humour, haven't they? I mean, come on. It's like down with the patriarchy, and then they give a nod to Ken and snub Barbie.
But what actually emerged from that movie? What was the swag? It was, I am Knuff. That was really what it was. It wasn't, Barbie swag. I mean, to some degree.
And let's be clear, there were some other Oscar nominations in the movie as well. Right?
America Ferrera.
right?
Fantastic performance. I think she's also disappointed because the director who went out had this huge campaign. They made so much money. It was a true blockbuster hit. And Barbie herself got snubbed. The whole point of the movie was, like you said, down with the patriarchy, yet Ken, at the end of the day, made it out on top.
I'm sorry, awards aren't charities.
I think
I'm just
there's no upside for me to say anything. Up next on the
probably
program,
not for me either.
let's sit this one out. The ECB and the Fed on deck.
I see a slope downward, but certainly not a slope which is at target.
That conversation's coming up next. You're watching Bloomberg Surveillance. The best thing that's happened this week. Bramo versus AMH on Barbie.
Let's move on.
What do you say? It's not a charity or something like that.
I have an unpopular opinion. I'm just going to lean into that.
It might be popular. You never know.
All right, let's move on.
Maybe Anne-Marie's view is unpopular this morning.
Enough.
You're enough. Okay. Under surveillance this morning, the ECB and the Fed on deck.
When I look at a year ago in Davos, and when I compare that with where we are today, I see a slope downward, but certainly not a slope which is at target. I would have said a year ago that we are determined. We want to get it to 2%. I would say to you now that we are confident that we will get it to that target 2% medium term.
Investors betting on global central banks to cut rates with the ECB decision due tomorrow, the Federal Reserve decision a week from today. And Bramo, I'm not saying it's going to happen in March or anytime soon, but that's the direction of travel based on communication like that.
The key difference for me is how far are they going to cut, given that they got inflation wrong? And I was really interested in what Catherine Nice, a former Bank of England economist, writing in the FT, put simply, it's a case of once bitten, twice shy, and policymakers will want to make sure that the inflation genie has been put firmly back in the bottle. 2Q, second quarter, is the earliest period in the frame for cuts. Again, this is sort of the big divergence right now, not whether they're going to cut, but whether they're going to cut more aggressively or whether they're going to take some caution from the fact that they got inflation so wrong in the aftermath of the pandemic.
Let's get into it with the brilliant John Riding, Chief Economist Advisor at Breen Capital. John, good morning to you.
Morning, John.
That word confident, can we pick up on that word confident? How confident are you that we're on a glide path back to 2%, both for the Federal Reserve and the ECB?
Fairly confident, provided both central banks continue to push back against the markets. Because this is an important point, and I think Governor Waller last week laid it out reasonably well. There's a difference between cutting interest rates and easing policy. And this hasn't been communicated particularly well. Inflation's falling. As inflation falls, interest rates adjusted for inflation, real interest rates get higher. So does the Fed and the ECB want to be tightening policy by not lowering the policy rate as inflation approaches 2%? And the answer is no. The market, however, is going differently. They're putting in these aggressive cuts. And aggressive cuts historically have been to fight a recession or potential recession when inflation's been relatively under control. So I think the central banks have driven home a couple of messages. One, we're really serious about 2%. And secondly, we are not going to cut aggressively. We're going to keep policy restrictive while we lower rates. And that's sort of subtle point that markets are missing right now.
What kind of language would you expect to hear next week then? Things like we need to calibrate policy, need to adjust rates, surgical rate cuts. What kind of language would you look for?
I think things like that. But the main thing is the Fed and Powell is not going to be in a position at the press conference to green light a rate cut in March. I think the Fed's thinking probably June at the earliest. And they're going to be pushing. There's no new interest rate forecast come out at this meeting for them to frame the discussion. The problem is Powell did a very poor job in December in opening up and talking about what's natural that we talked about rate cuts, to the point where John Williams from the New York Fed had to go on a different channel 2 days later to try and set the record straight. And it's really, he needs to do a better job laying out that when we cut rates, it's not about easing policy aggressively. It's just about preventing policy from becoming tighter. But the Fed has not laid out a strategy in a way that's clear, a strategy for running monetary policy. It was they've done a lot of discretionary policy, seat of the pants stuff, and that leaves the markets to, overlay their own interpretation. Like, they signaled 3 rate cuts, and the market took 6 in December.
Well, hold on a second. If you take a step back, it sounds like you think that the Fed and the ECB are going to have to seriously push back on all of the risk-taking that we've seen. We've seen peripheral spreads come in dramatically in the Euro region. In the U.S., Priya Misra was sitting in your seat yesterday and said she's the most bullish on high-yield bonds that she's been in a long, long time. Are we going to hear direct pushback from the central bankers this week and next?
We're going to hear continued pushback, as we heard last week from Waller, as we heard last week in that clip you had from President Lagarde, that the markets are ahead of where the central banks are. And as for getting punched, we're not out of the woods yet in having a recession. That's something that one of the really weird things I haven't figured out in markets is you have risk assets like high yield bonds pricing in a good economy, and you've got the interest rate markets pricing in a recession, because if the Fed is going to cut rates that aggressively, we're probably going to be in recession, and then that's when spreads blow out. So there's a sort of disconnectedness between the rate markets and the spread markets right now.
There's only a disconnectedness if you think that the immaculate disinflation isn't going to continue. If you think that people have gotten ahead of themselves in this idea that inflation will naturally come down as the supply chain effects and other pandemic-related consequences evaporate. Are you pushing back on that? Do you think that the inflation rate now is substantially higher going forward than it was in 2019?
I think that back in 2019, the predominant question that the central banks were thinking is, how do we get inflation up to 2%? And now it's, how do we get it down to 2% and keep it there? But you know what? Central banks are giving us something that we rarely see in economics. You've got the Bank of Japan, which still has negative interest rates and a very easy monetary policy, versus the Bank of Canada later today, versus the Fed, versus the ECB, versus the Bank of England, who have a much tighter policy. So we'll see. If it's all about supply chains, then inflation is going to come down in Japan. I suspect that's not the case. Japan's had upward pressure on inflation, and they may well continue to have upward pressure on inflation until they take action. It's an odd world where 1 or 2 words here or there, while still having negative interest rates, is considered hawkish, which was the interpretation of yesterday's BOJ meeting. Inflation ultimately is about monetary policy. It's one of those principles of economics that I fundamentally believe in, that inflation is a monetary phenomenon. That doesn't mean to say, the cost shocks and so on are unimportant, but that doesn't become inflation if the central bank pushes back on it. And look, 2021 was a disaster. 0 rates, buying $120 billion of bonds a month. While inflation was picking up, the Federal Reserve unleashed the inflation genie. And they had to do something else in 4 consecutive 3/4 point rate hikes in the mid to late 2022 to push that back in. It was hard fought. We haven't had the recession yet. They've done very well getting away with it. They don't want to throw in the towel. With the stock market essentially the record, where's the cost of current interest rates? But if the Fed were to cut aggressively and then find, oh no, we made a mistake, inflation has not gone back into the bottle, hasn't stayed in the bottle, and they have to start hiking again. That's the scenario they want to avoid.
The risk cuts both ways. John, it's good to see you, as always. The brilliant John Riding of Bring Capital. 21 was a disaster. Will 2024 be a disaster? And I'm with John, most people are. December was a messy meeting from Chairman Powell. It's difficult to find the consensus that he was seemingly reflecting in that committee meeting, in that news conference, in the minutes that came out later on. Where were those comments?
He unleashed animal spirits, some people could argue. And now the question is, how do you put that back? Do they start to get more aggressive to really gut check the market's enthusiasm?
When the New York Fed president has to come out 48 hours later and correct things.
It didn't work.
And it didn't work. Something's gone wrong. Coming up in the next hour, IBM Vice Chair Gary Cohn, Kathy Jones and Charles Schwab, plus the latest from New Hampshire, from New York City. Good morning.
Everyone believes that the next move by the Fed is a cut, which means people can start planning for that.
This isn't recession, cut early, cut fast, cut deep. This is move gradually and methodically.
What matters is the end point. How much are they cutting? What is the reason that they're cutting? I would argue the market's pricing in these rate cuts.
You can deliver what's priced into the curve or even less and still have yields just fairly stable.
People are just ready to throw in the towel that, it's time for cuts, let's move on. And what we've seen this month is people capitulating a little bit.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance alongside Lisa Abramowicz, together with Annmarie Hordern. I'm Jonathan Ferro. Your equity market on the S&P 500 positive by 0.4%. 4 days of gains on the S&P. The longest daily winning streak of the year so far. 3 consecutive all-time highs. And juicing things just a little bit this morning. Netflix, Bramo, knocking it out of the park.
Honestly, the rally that we've seen so far and the record highs entirely driven by big tech. Magnificent Seven. We just saw the biggest 2-week inflows into tech-related stock funds going back to August. At a certain point, they're the ones delivering. They're the ones supporting a lot of the earnings. How long will it take before everything else catches up?
The stock is up by 10%. Lisa, go through some of the headlines. Best quarter for sub-growth since the pandemic. Beating projections in every single region of the world.
Yeah, the tally that Wall Street was expecting was 8.9 million. They got 13.1 million new customers for the last 3 months of 2023. Again, this is after everybody signed up during the pandemic because they were tortured with their children trying to figure out what to do with them. I'm just saying theoretically. So the fact that you could get this, nothing at all. But this to me indicates the incredible growth. Are they taking over for someone else, or are they just simply capitalizing on people's need for entertainment?
Upside surprise for Netflix. Positive surprise if you're a fan of Donald Trump. Another big win, AMH, for the former president after another big win before in Iowa.
That's right. He has back-to-back wins now. Iowa, New Hampshire. I will say the margin he won wasn't as big as they expected. So in that sense, Nikki Haley did do somewhat well, given she was up against this massive lead in the polls. But it does look like he's just consolidating. And if you look ahead to South Carolina, it's 30, 40 points that he is up in some of these local polls, and that is her home state.
We keep talking about 2 questions. Why is Nikki Haley still in the race, right? What does she hope to accomplish? Is she just waiting for Donald Trump to have to bow out for some potential reason? And then the other question that I really have is where are independents going to go? And you really went to this earlier, but they seem to be migrating away from Trump a little bit more than they did in 2016.
More on that in about 10 minutes' time. Let's get you up to speed on the broader price action. Equity futures on the S&P 500 positive here by 0.4%. Bond yield to lower by 2 basis points, 4.1070 on a 10-year in America. Over in Japan, the JGB market selling off just a touch. Yields higher. We're talking about rate cuts at the Fed, maybe rate hikes at the BOJ.
It's not a market. I'm sorry. Let's see what happens
Hasn't been
when
for
it
a long,
comes.
long time.
Right. So what happens when they actually start trading? I mean, how much of the JGB market is owned by the Central Bank of Japan, the Bank of Japan?
Something like half.
Yeah. So, I mean, honestly, at a certain point, okay, but they are moving in a different direction. And does the U.S. potentially cutting rates open the door for them to do it further?
Yields up in Japan by something like 5 basis points. If you don't follow the JGB market,
it's okay.
Use the term market loosely. 5 basis points is something, let me tell you. Coming up in the next hour or so, Gary Cohn, the IBM Vice Chairman and former National Economic Council Director, joining us around a table in just a few moments. Bloomberg's Katie Lyons in New Hampshire as the former president takes another step towards the GOP nomination, and Michael Nathanson of MoffettNathanson on Netflix's blockbuster quarter. That stock is up by more than 10%. We begin with our top story. 1 week out from the first Fed decision of the year, a string of stronger than expected data leaving economists split on the timing of rate cuts. Neil Dutta of Renaissance Macro writing, quote, inflation is slowly, relatively quickly, moving back towards target. Labour markets are slowing, but they're not slowing as quickly. The net effect of that is going to continue to juice real incomes. It's not an economy firing on all cylinders, but it's an economy firing on enough cylinders. With us around the table, I'm pleased to say, Gary Cohn. Morning, Gary.
Good morning, John. Thanks for having me.
I was reflecting on our conversations we used to have many years ago when you were in front of the White House, and you used this term, the threes. Are we going back to the threes? Is that what you think we're going back to?
It feels like we're going back to the threes. You know, in the threes, for those that don't remember me standing in front of the White House talking about the threes, I was talking about 3% GDP, 3% unemployment, and 3% wage growth. That was sort of the sweet spot that we were trying to achieve at the time. And we thought that was a really good, solid place for the United States economy to be. And that was sort of the goal. That was sort of the middle of the target that we were trying to hit, you know, month after month as we were talking on those Fridays after we released job data.
What I've noticed from you is that we seem to have forgotten what normal is.
Well, we totally forgot what normal is.
You've been around for a long time. You've seen many cycles. What is normal?
So this is a campaign I'm on in many respects that we have forgot what normal is. So to go back to what normal is, we have to go back to the post-2008 financial crisis. Because since 2008, you know, the Fed has been the overwhelming dominant feature of financial markets. So prior to 2008, you know, Fed meetings were important, but we didn't live and die off Fed meetings. In fact, I'm old enough to remember when money supply was what drove markets. Now, I'm really dating myself on money supply there. But then we get to 2008, and the Fed goes into the whole policy of zero interest rates and quantitative easing, followed by many other central banks around the world. And as the Fed goes into the zero interest rate policy and they continue to build a bigger and bigger balance sheet, they become the dominant factor in financial markets, not just in the fixed income markets, not just in the rate markets, but when you literally have zero rates of return, you're literally forcing people out into the risk spectrum. So you bring many other asset classes that have historically not been appealing to people, you bring them into play because the search for return, the search for yield, you go farther out on the risk spectrum. So we lived through the 2008 period all the way up to basically, I would say, COVID, with this zero interest rate policy, people looking for alternative assets, looking for yield, searching for it in unusual places. We come into the COVID period, and sort of the Fed stays in their zero interest rate policy because they have no idea really what's happening. I'm not sure that that's a mistake. You know, when you don't know what's happening, don't make a change. And then all of a sudden we get into we'll call it the Biden administration. And we've gone through 5 stimulus packages in the United States. And all of a sudden we've got U.S. consumers with the best balance sheet they've had in their life, enormous amount of disposable income, the ability to finally go out and spend it after not having the ability for almost 2 years to spend anything that, like I said, you can't buy it at the grocery store, FedEx or UPS or the United States Mail Service can't deliver to you, you can't buy it. We now have the ability to go out and spend that money. And lo and behold, we end up in a highly inflationary cycle. So the Fed goes from this zero interest rate, trying to drive economic growth, trying to drive inflation. And I always remind my best friends, you know, if you would have picked up any newspaper prior to 2000, in that 2008 to 2020 period, the Fed headline would have been, can the Fed ever create inflation again? So now we're back in this highly inflated period, and the Fed goes from, you know, quantitative easing to quantitative tightening to zero interest rate policies to 50 basis points sort of month in and month out. So we have been through this 15 plus year cycle of what I would call abnormal. On top of that, we end up with this inverted yield curve because everyone's convinced the Fed's raising rates, the Fed has to slow down the economy, we have to see job degradation, so we have to go into recession. I think the missing component there was how strong personal balance sheets were. So we don't go into recession. We still have an inverted yield curve, which I don't think is normal. So I think now, for the first time in this 15-year period, we're getting to a position where we're starting, and we're just at the very beginning of heading back towards normal and what normal would be. And so reminding people a little bit what normal looks like, it's going back to the 3-3-3. But historically, we have a positively shaped yield curve in the United States. We have a risk premium. Historically, if you look at 10-year yields, the 10-year average yield in the United States, you can either put in the Volcker Fed or you can take out the Volcker Fed. With the Volcker Fed, it's 4.6%. Without, it's 4.3%.
If you put aside all of this, right, if you take a look at the Fed and say, okay, it's on the back table, you start to look at the economy, it looks pretty good. It doesn't look like we're going into recession.
Agreed.
Why do people feel so bad?
Here's why people feel bad. Like, the inflation number and the inflation data is the most peculiar data we have in the United States. We count inflation either month over month or year over year. We don't zero baseline it anywhere. And so when we talk about inflation, we say, how much inflation do we have over last month? And if we had inflation month over month, it means what you paid last month is here, and what you're paying this month is higher. If we have inflation year over year, it's the same thing. So we've seen the compounding effect of a 3% inflation year, a 9% inflation year, a 3%, all that adds up to 20+%. So when you're a consumer today, you're a hardworking consumer today, your basket of groceries is 20+% more than you think it should be worth and what it was worth 2 years ago. So the compounding effect of inflation, because we don't have a zero baseline basket, is really what's affecting people's mentality. The second part of the equation is people are working harder. They're working more jobs to be able to buy what they want to buy. The savings from the pandemic is gone. It's not all gone. There's still a lot of it sitting in Treasury and money market. But if you look at the financial position of many Americans that went from, high consumer debt going into the pandemic, then they went from consumer debt being wiped out, they went to high savings rate because they were sort of forced in. They've actually spent all that money back. They're back to where they started. They're back at consumer debt. So they do care a lot about the inflation, and they care about their purchasing power. And we are talking about wages today exceeding inflation. But that's on a sort of spot market basis. We haven't talked about it over a 1 year or a 2 year basis.
I got to say, I wonder how messy the data is as well. And if you were still the head of the Economic Council advising the president, how would you communicate the idea that we're seeing churn, massive churn in response to technological advancements? I'm thinking about eBay laying off 9% of its staff because it needs to upgrade certain things, or SAP in Germany. You're seeing this again and again. How much is that featuring into the messiness of the data?
We always have messy data. We're always, we never really get totally clean data. We could talk about all the revisions to the unemployment data. It's a survey data, and then they go and revise the data from a month and 2 months ago. And sometimes the revisions are bigger than the actual data. But we of course fixate on the data on that Friday, and then a month later we say, oh, that data was completely wrong. So if you're in the world of looking for the clean, pure answer, our economic data doesn't give you really clean, pure answers on a real-time basis. If you look at the data over a cycle and over a period, it gets very clean over time. I think you've got to look at the data on a longer period of trend. That's why a lot of people, like I look at the JOLTS report. I think JOLTS is really interesting to me because it shows job openings, amount of people looking. But what's in there, there's some really interesting numbers in there. It shows you how many people quit their job. Quits to me is one of the important numbers. People only quit their job when they feel like there's a better job out there. So it's a pure measure of what people's psychology on the market is. When the quit rate goes up, it means I believe I can get a better job, better paying, better quality of life, and I'm not worried about quitting. When the quit rate goes down, people are saying, okay, the job market's not very good. I should be happy with the job I have. I don't love it, but I should be happy with the job I have. So there's data out there. If you put it all together, I think you can create a pretty clean picture for yourself.
Unlike this administration, Gary would actually communicate. Bramo, that would be the answer to that, but we won't get into that now. Gary Cohn is going to stick with us. Let's get you an update on some of the stories elsewhere this morning. Here's your Bloomberg Brief with Yahari Jackets.
Hi, John. Donald Trump is marching towards a November rematch with Joe Biden. After the former president comfortably won the New Hampshire primary, Trump beat his only remaining challenger in the GOP race, Nikki Haley, with the former UN ambassador refusing to back out of the race. Netflix is surging this morning after posting its biggest subscriber gain since early in the pandemic. The streaming service's decision to crack down on password sharing and introduce a cheaper ad-supported version paying off, with more than 13 million customers signing up in the last quarter. And Tesla telling suppliers it wants to start production of a new mass-market EV midway through next year. That's according to Reuters. Currently, Tesla's cheapest car starts at almost $40,000, but this reported model would start well short of that. The company will report earnings later today, with the stock down more than 15% to start the year. And that's your Bloomberg Brief. John?
Yahara, thank you. Equities right now on the S&P 500 positive by 0.4%. Up next on the program, Nikki Haley vowing to press on.
This race is far over. There are dozens of states left to go.
That's coming up next on the program. You're watching Bloomberg Surveillance live from New York City. Good morning. Four-day winning streak on the S&P 500 about to become 5 based on this move this morning, up by about 0.4% on the S&P. Yields coming in lower by about 2 basis points, 4.11% on a US 10-year. Under surveillance this morning, Nikki Haley vowing to press on despite her loss in New Hampshire.
This race is far from over. There are dozens of states left to go. And the next one is my sweet state of South Carolina.
Here's the latest this morning. Donald Trump defeating his only remaining rival in the GOP race. Trump's victory putting him squarely in the driver's seat. No Republican has failed to secure the nomination after winning the first 2 states. The former president now set to deliver the knockout blow, AMH, on Haley's home turf.
Yeah, the polls look really complicated for her in her home turf of South Carolina. The Wall Street Journal this morning, Jonathan, giving some advice, let's say, to Nikki Haley. They say she has an opening to take on Mr. Trump for his proposed 10% universal border tax. She can point to his failures against China, his coddling of dictators, his failure to boost defense, much while adding almost as much to the national debt as President Biden. But she also needs to grab a specific cause or two, perhaps school choice and parental rights, and make them hers. Can she do it? This is the problem. There's a huge machine now behind the former president.
Let's get to Kelly Lyons on the ground in Manchester, New Hampshire. Great to catch up, Kaylee. Let's do this all over again. Nikki Haley, does she make it to South Carolina based on what we saw last night?
Well, she says she will, Jonathan. Of course, she and her powerful surrogates like Governor Chris Sununu here in New Hampshire had said all she needed was a strong second place. They didn't, though, define exactly what strong is, and arguably an 11-point gap between her and Trump, who won last night, isn't necessarily a strong showing. That said, she still vowed to continue on. 4 weeks from now, on February 24th, is that primary. The difficulty she's going to have is that if she couldn't perform that well in New Hampshire, even with the large base of moderate Republicans and independents here, it's very difficult to see how she could perform better in a future contest like South Carolina, where the base is significantly more conservative. The MAGA base is very strong there, and that could be potentially weaponized against her moving forward. The attacks could sharpen. So that is why many people this morning are saying essentially that the general election has now begun. Now, what we're heading for is a rematch between former President Trump and President Biden, a development that the Biden campaign is welcoming as they believe that he can beat Trump once again, as he did in 2020, but frankly, a development that many Americans don't want. Polls show 70% would not like either man to be president a second time around, and yet it looks likely this morning that that is exactly what they're going to get.
This is now going to paint so many of the political stories, especially what's happening in Washington, D.C. If Trump is now basically almost coronated as the Republican nomination, what does this mean for a border deal? Because that would give a huge win to the sitting president, Biden, ahead of a key election.
Yeah, that's exactly right, Annmarie. Obviously, Biden is currently actively negotiating with Senate leaders to get a border deal done. And the question is going to be whether or not that can pass in the House when Speaker Mike Johnson has a very close relationship with Donald Trump, as does the vast majority of Republican leadership. All of them have lined up to endorse the former president. And Trump has said that they should only accept a perfect border deal. Could he exert pressure to make sure it doesn't get over the finish line and be politically advantageous to his opponent, Joe Biden? One thing I will say, though, guys, as we talk about all of this very likely general election rematch between two individuals, keep in mind that the group No Labels has said they would run a unity ticket if by Super Tuesday it looked like what it was going to be was a Trump-Biden race. So just watch for that. Someone like Larry Hogan or Joe Manchin, of course, the senator from West Virginia, who is no longer going to be running for re-election to that seat, to see if someone else, a third party, could come into the picture here, because there's a long way to go until November. This is going to be the longest general election in modern political history.
Hey, Kaylee, already feels like a year long already. Kelly Lyons, thank you, over in New Hampshire. With us around the table for some final thoughts, Gary Cohn. Gary, I know you don't want to talk about the horse race. We won't do that, but I do want to talk about policy.
Sure.
Tax cuts, tariffs. Let's start with tax cuts. Hardly been talked about. You and I caught up yesterday, and I have to say, I haven't talked about the tax cuts and all the money that's starting to come back into the country for the best part of 6 years or something like that. How relevant are yesterday's tax cuts to today's economy?
Well, the 2017 tax cuts. And I think they're really important. So this is back on the theme of normalization. So since we really got the tax cuts through that were signed December 22nd of 2017, we sort of had 18, 19, we had sort of two normalized years. 18 was sort of an implementation year. And we saw some really amazing things start happening. We saw real repatriation of foreign overseas money. saw $1.5 trillion come back in the United States, because in the old tax system, corporations could leave their money offshore and they didn't have to pay U.S. taxes, so they brought it back. We deemed that money to have brought back, so we taxed it. It got brought back. I think when you see what's going on, and there's the manufacturing boom in the United States right now, which started in that period of time, a lot of that has to do with this repatriated money. Historically, when companies couldn't bring their money back, they had to invest it overseas. They built manufacturing overseas. They invested in property, plant, and equipment. Now that they're being taxed, no matter whether they bring it back or not, they're bringing it back, they're paying the tax, and they're investing. So you've seen the creation of manufacturing in the United States. This started in 2018 and 19 as companies started bringing back their repatriated money. You've also seen the growth that we've seen in consumption. You've seen the growth in the middle class's ability to spend money. Hardworking individuals got a real tax cut. And that's why I think people have missed the economic picture in the United States so badly. Everyone calling for this recession over the last year and a half, I don't think they understood the additional consumptive powers that the tax cuts created. We put real additional disposable income into people's pockets. And we did it on purpose. We made some very conscientious decisions to make sure that we were delivering real taxable returns or less tax to the hardest working individuals in America. And it takes time for that to feed through the system. It doesn't happen year one. And then we go through COVID. So you get all of these, unnatural phenomena. And now we're back to what I say is more normal behavior. People are understanding what their taxable income is. Some of the programs that we put in 2017 have expired. And I'm happy to say that we're seeing some bipartisan legislation to reinstate some of those programs. There's a bill going through the House right now to reinstate some of the child tax credits, along with accelerated depreciation and the write-off of R&D credits. We think both sides of that equation, they were in the original tax bill. We think they're both important. You're taking care of both sides of the equation. We have to take care of hardworking families with children, and we have to incentivize companies to continue to do R&D and continue to invest in the country.
Gary, those individual tax cuts from 2017 are set to be expired. As you say, that helps individuals and taxes, but if you have a 10% tariff wall around the United States, that's a massive tax on consumers. It
is. So look, the tariff wall is something that needs to be discussed. I know it's a potential that's being discussed out there, and it's an idea. It's something that's being used to potentially pay for the future tax plans.
Wouldn't it negate it?
Look, I think we shouldn't get too far ahead of ourselves right now. As you said, the personal side of the tax reform package terminates in 2025. There will be enormous amount of discussion to what happens between now and 2025. It will be important to what the makeup of Congress looks like, to what you are able to do, what you're not willing to do. Are you going to be able to do this through reconciliation? Are you going to be able to do it through normal order? Are you going to be able to do it with a simple majority? To do that means Republicans would have to control the House, the Senate, and the White House. If you've got a split Congress, or maybe the Democrats control all three. If you're doing it through reconciliation, you're going to be able to do it through one set of policies. If you do it through regular order, you're going to have a much more of a compromise on what goes on here. So I think that the ideas that are being talked about right now are concepts. And this is what's interesting about the electoral process in the United States. And I think this is why it's important. This is a time where potential candidates and incumbents, and we actually have a couple of incumbents running, they get to tell us about their ideas of how they want to run the government. And these are ideas. If you look at the history, there are concepts and they're starting places. They're not necessarily ending places.
Bremo's got thoughts. I know Anlita's got thoughts.
Well, no, to me, the idea, so many people have come on and said, we're taking it seriously. If Trump says something, we're taking it seriously. And Gary Cohn is saying, maybe not. You got to look at the whole process. Unfortunately, we're out of time, but we'll have to get you back to talk about that.
Hey, Gary, it's good to see you. Thanks for this morning. Thank you, sir. Gary Cohn. Coming up next on the programme, Netflix shares surging in the pre-market after reporting some stellar numbers. Those numbers up next. Stocks are positive by 0.4% on the S&P 500. On the Nasdaq 100, all-time highs at a close yesterday, up by another 0.7%, helped up by the earnings. Netflix looking better than good. In the bond market, 2-year, 10-year, 30-year, believe it or not, a week away from a Federal Reserve decision. Yields are lower by a couple of basis points. Bramo 410.89.
And really, it's a matter of how much they push back against some of the enthusiasm that we've seen in risk assets, given the fact that we're still seeing about a 50% chance of a March rate cut being priced into markets. To me, that's one key question at a time where you're already seeing it priced in, and frankly, risk to the races, led by big tech that's delivering on the earnings.
Don't want to geek out too much, but how much have you heard about inflation revisions? This conversation started yesterday with Priya Misra of JP Morgan. Morgan Stanley's Ellen Zentner wrote about this as well. Policymakers would do well to defer judgment on inflation and the timing of the first rate cut until after the February CPI revisions. That's the focus of Ellen and a lot of other people too.
People think that the data was messy because of some of the year-over-year and holiday types of comps. I will just say this. The longer this sort of rate-cutting parlor game continues, the more you're seeing long-term inflation expectations tick up. I'm looking right now, if you look at the forward break-even contracts, not to geek out too much, but 2.4%, down from a low recently of 2.1%. So it gives you a sense of how much people are really gaming out longer inflation, higher inflation for longer.
That's the next month or so. Let's finish on foreign exchange. The euro just south of 109 against the dollar, 108.89. Positive, though, on the session by 0.3%. Under surveillance this morning, Donald Trump taking another step towards a rematch with Joe Biden, the former president winning the New Hampshire primary, comfortably beating his only remaining challenger in the GOP race, Nikki Haley, refusing to back out. The next primary is in her home state of South Carolina next month. And AMH, the polls do not look good.
They don't look good. Also, look at the endorsements in South Carolina. One member of Congress at this moment, Ralph Norman, the only Republican member of Congress to back her in South Carolina. You have Senator Tim Scott. You have the governor of South Carolina. They're all going to coalesce around Trump. So the pressure is really going to mount on her and her campaign.
Kind of shocking that Tim Scott ends up backing the former president when it was Nikki Haley that helped put him there.
And also the optics of last night. He was just behind the former president, shining as he dropped out. And you're 100% right. Nikki Haley appointed him.
Yeah, the fact also, I mean, just everyone coalescing around Donald Trump. I just think about what this means for passing any kind of budget deal, what this means for any kind of border deal, what this means for anything, because anything that gives Biden a win is going to be negative for all intents and purposes, the leader of the Republican Party.
And what it means for foreign policy issues as well. Check out this. The U.S. striking Iran-backed militia in Iraq after the group attacked an airbase housing American troops. Defense Secretary Lloyd Austin saying it came in response to a, quote, series of escalatory attacks against U.S. personnel in Iraq and Syria. The U.S. also conducting further attacks on Houthi rebels, striking 2 anti-ship missiles in the Red Sea. These two stories are connected. The election race of the next 10 months, 11 months, and what's developing in the Middle East.
Yeah, absolutely. So foreign policy will become a little bit more important. What the administration wants to do is they don't want to see this conflict expand in the Middle East. So what they are doing is this laddered approach, very much in line with U.S. policy. They're going after training facilities and they're going after the housing of missiles and all these weaponry that these Iranian-backed militia can use against the U.S. and the ships.
We've been talking about escalation about 3-4 months ago. Is this an escalation, or is this basically, for all intents and purposes, it has become a war, just sort of a low-grade war that is a hot war between the U.S. and Iranian proxies? And you can see that. Now the question is what this is going to do to Iraq, whether they're going to ask to pull out some of the U.S. troops that have been there. I mean, how much they really push back. And it really does feed into some of the election narrative.
Essentially in 2 proxy wars.
Yeah,
One with Russia, the other with Iran.
Absolutely. And what I think you'll probably see from the Trump campaign to really want to step up is that they decided to go for a big strike target when it came to going after Iran. And that was Qasem Soleimani. And reporting we have following that was that actually through intermediaries, individuals went via the Swiss and others kind of frantically going to the U.S. after Qasem Soleimani was taken out, that we're done. We want to stop and we want no longer of this bloodshed in the region.
Let's finish on this story right here. ASML seeing orders for its semiconductors more than triple in the last quarter. The CEO of Europe's most valuable tech company telling Bloomberg's Tom McKenzie the semiconductor industry has now bottomed.
We see the first positive signs of recovery. So at the beginning of the year, we'd much rather be a bit conservative. But as you also saw, had a record quarterly order intake, which also bodes well for 2025 and perhaps the back half of 2024.
So to be clear, this semiconductor market has now bottomed.
That's what we believe. We see the positive signs.
It's the latest sign of a resurgence in the industry. TSMC earlier projecting strong revenue growth in 2024. I have to clarify here that we're talking about a company that produces equipment needed to make the most sophisticated chips on the planet. Huge demand out of China for good reason, and I wonder what that demand is going to look like, or rather their ability to supply it in the years to come.
Especially if some of these sanctions and things go into play, and whether they're sort of front-loading some of that, given some of the increasing geopolitical risk. But frankly, we've heard from Qualcomm as well as other executives from Intel and beyond saying that this is only going to increase the race in China to develop their own chip, and it will hamper their ability to compete. So we shall see exactly how this develops.
Yeah, ASML seems to be benefiting from this race to hoard a lot of this technology before potentially more of these penalties come online. But at what point does that become beneficial, or how much does AI actually outweigh it? Because you also need this technology if you want to build out AI technology.
That stock is up in European traded by something like 7%. Elsewhere, Netflix absolutely soaring in the pre-market following a blockbuster earnings report. The streaming giant winning more than 13 million new customers in the last quarter, the best gain since the start of the pandemic. The jump coming as the company introduces a cheaper ad-supported platform and cracks down on password sharing.
We're really thrilled with our engagement trends domestically and globally. Our engagement is a bit impacted by our paid sharing. Think about it like fewer households using the same account. So as those folks spin off and get their own accounts and we win them over with our programming, that will normalize and continue to grow.
Michael Nathanson joins us now, Senior Research Analyst at MoffettNathanson. Mike, it's always good to hear from you, sir. Netflix just getting it done. Better than good. Walk me through where the revenue growth comes from now. Is it higher subs or higher prices?
Okay, good morning. It's probably a mix of both, right? So on the sub front, they have a lot of room to grow in developing markets, Latin America and Asia Pacific. On the revenue side, on the ARPU side, they are still introducing this advertising tier, and they're rolling that out at a lower price. So over time, they'll grow advertising. So they have a steady mix of going forward, volume and price, and you're probably looking at like an 8 to 10% top line growth over the next few years because of that.
Michael, do you expect consolidation that Netflix is involved in? And I asked this after we were speaking earlier with Chris Marangi about just how much there's going to have to be this kind of tie-up cycle within media.
Yeah, it's a good question. Netflix won't participate in that tie-up cycle. Their competitors have never been weaker. The competitors, meaning the people who own cable networks, WB, Warner Brothers Discovery, Paramount, have to do something. The wild card here is Comcast. Comcast has Peacock, as you know, we talked about it last week, but Peacock is still not fully scaled. So there has to be some type of streaming consolidation and linear network consolidation. And I don't know how that gets done in the near term, but Netflix will not be part of that. They made that clear yesterday.
How much is Netflix independent in being able to crack down on password sharing versus kind of a shining light for the rest of the industry to be able to crack down HBO, Beyond, Peacock, et cetera, and capitalize on the eyeballs that might not be paying the bill?
Yeah, it's a really interesting topic. Netflix has been the first down this path because they hit maturity the first, and they also didn't really care about password sharing in the beginning. I don't think the others have the same opportunity because they don't have as much volume in programming. They probably don't have as much password sharing. We don't know. Netflix has quantified about 100 million homes that are password sharers. They've not yet told us how many of the 100 million have been converted. At this point, they probably don't know because it's all been mixed together. But I don't think the others have the same opportunity because they're still growing their business and they don't have the volume yet. So it's a real challenge for everyone else to actually play the same game that Netflix is playing. They're on a different plane in terms of what they're able to do right now.
Michael, when we caught up with Gabelli Funds, Chris Marangi, in the last hour, he was talking up consolidation in the industry. Where do you see consolidation coming from and who between?
It has to be some combination of Warner's, Paramount, and NBC Universal. Disney's not going to do any more deals. Netflix is fine. I don't really think Amazon and Apple are going to move here and buy other assets. So to me, it's the legacy media companies have to find cost synergies have to get streaming scale. So Jonathan, it has to be the people who are just, wounded now by cord cutting and the rise of Netflix, right? And again, because of either personalities or regulatory pressures or just kind of the unwillingness to come together, I don't think it's necessarily going to happen this year. So it's, to me, this is going to be more of the same for 2024.
Michael, I want to dig into that. Are you saying that the egos, as some of these companies are so large, they won't consolidate until they're forced to? So ultimately, you might have to see more pain first.
Oh, with that, thank you for saying that more articulately than I did. Yes, exactly. That's what's going on here, is that, you have to recognize you have a problem. Now, I don't, someone is going to have to go to one of their competitors on their knees and say, hey, let's find a way to work together. And I don't think the people who run these companies want to do that yet.
So with that in mind, what is there to like about this sector? What is the top pick?
Well, I said this a couple of weeks ago. Our favorite stock idea is shorting Roku, but that's not for a lot of our, people listening. So our favorite call is we have a short call on Roku just because we think lessening competition in streaming is not good for Roku. But we also have a buy on Disney with the idea that Disney has to articulate a profit story in streaming in 2024. They've been vague about their long-term profitability. Netflix will be at 24% profit margins this year, and Disney will be maybe break even by the end of the fourth quarter. So we say Disney in media, and it's really about their articulation of profitability. And hopefully in the first half of this year, we'll get more information on where they see their business kind of, heading towards in profitability.
Michael, thanks for the insight. It's always good to hear from you. Michael Nathanson there of MoffettNathanson. I think the best idea tells you everything that MoffettNathanson thinks about that space right now.
It's a short bet. That is all you can say. He laughed and then said, well, actually, it's shorting Roku because that's probably going to lose. And a really unenthusiastic explanation for Disney. But this really highlights the, lack of conviction if the ego is going to get in the way of trades that might make sense.
I won't start saying who's got the biggest ego
in
that space. No, I won't.
Listening.
But ultimately, that's never good, is it? That things have to get worse before they get better for leadership to concede that something needs to be done.
Because they have to agree to a price that they don't like. And that's the bottom line. And that's the reason why people have been surprised by how slow this process has been that everyone has expected for quite a while.
A lot of people like Netflix this morning. That stock is up by something like 10%. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara. Hey, Yahara.
Hi, John. AT&T has delivered a strong fourth quarter with its wireless and broadband businesses growing at a faster pace for the second consecutive quarter. The telecom provider has been in a tough stretch of slow growth and job cuts. CEO John Stankey had embarked on a ruthless cost-cutting campaign that includes office closures and slowing investment into 5G and home internet. Apple is dialing back its auto ambitions after a decade-long effort to build a car. Bloomberg has learned the firm is now looking at an electric vehicle with more limited features, pivoting from its plans to make the vehicle driverless. The target release date for an Apple car has also been pushed back to 2028 at the earliest. And tech layoffs continue. German software company SAP plans for an 8,000 job restructuring to build out AI, while eBay will cut 1,000 jobs. That's 9% of its full-time workforce. It's the second round of reductions at eBay in a year. 60 other tech companies, including Amazon and Alphabet, have let almost 11,000 employees go so far this year, according to layoffs.fyi. And that's your Bloomberg Brief. John?
Yahara, thank you. We'll catch up with you in the next hour. Up next on the programme, it is the year of the landing.
The market is pricing in very low chance of a hard landing. 35%, 40% chance of hard landing, I think is still there.
That's next on the programme. You're watching Bloomberg Surveillance. The grind higher continues on the S&P 500, positive here by 0.4%. Into the bond market, yields lower by 2 basis points, 410.31. And foreign exchange, the euro a touch stronger here, 108.96 against the dollar. That currency pair positive by 0.4%. Under surveillance this morning, it is the year of the landing.
The market is pricing in very low chance of a hard landing. 35%, 40% chance of hard landing, I think is still there. Because when you look at the details of the data, it's not all that robust. There is a chance that things slow down, or the Fed doesn't cut fast enough, or they continue QT long enough. And that's when that chance of something going wrong, I think we always have to be positioned for that.
Lisa asked for very specific numbers, percentages of hard landing, soft landing. The Fed waiting another round of reading on the economy with the PCE deflator on Friday. Michael Gapin of Bank of America expecting a March rate cut, saying, quote, what gets them to cut in March is the inflation data. Even if the activity side of the economy is doing well, it's the deceleration in inflation. As we roll into the March meeting, I think they get gradually more confident, Lisa, about the trajectory.
And you know who agrees with Michael Gapin? It seems like Jim Bullard, the former president of the St. Louis Fed, because yesterday in a Wall Street Journal interview, he was saying he expects the Fed to lower rates before we get to that 2% target in inflation, and that cuts could come as soon as March. He wrote this: inflation on a 12-month core basis, you could get to 2% by the third quarter of this year. This is tricky because the Fed doesn't want to get into the second half of 2024 and inflation's already at 2% and you still haven't moved the policy. That would be too late. That was his verbs. So suddenly he's a dove after being a hawk and then having been a dove.
Remember, his was the dot right at the very bottom of the dot plot for all those years.
And then at the very top of the dot plot.
I just love hearing from ex-Fed officials because at least they're open and honest about how they actually feel and not guarded.
And you get the feeling that they're paving a path for the March rate cut, even if some people are worried that that's just going to unleash yet another round of analysis.
And of course, when you're a former Fed official, you don't have to worry about shaking up market expectations.
Well, you can do it anyway, but yeah, exactly.
You know, you're not going to move markets like you used to.
You're not going to move markets, and you're not going to hear anything from your colleagues in the next meeting.
It's another way of saying you're less relevant, but that's not what I mean. Kathy Jones joins us now, Chief Fixed Income Strategist at Charge 12. Kathy, good to see you.
Nice to see you.
Michael Gapin saying rate cut. He was on this programme in the last 24 hours saying rate cut in March. Do you still think that's too soon?
You know, it isn't what I think the Fed ought to do. It's what I think the Fed will do, and all the communication keeps pushing us back to maybe May. So we have priced in, we have penciled in a May start to the rate cuts. And one of the reasons is in March, they still need to address the balance sheet, which we know is a topic. So we've heard from Lori Logan about tapering QT. I think that that's likely to happen at the March meeting. We have the expiration of the Bank Term Funding Program, although that can go for another year. So there's a few things in the way, and they also need that level of confidence that inflation is actually going to stay down. And I think that all pushes us more towards May than towards March.
But you think that there's a high chance that they could do it in March, even if they shouldn't necessarily do it, according to you. Where does that leave you? I mean, are you with Priya Misra leaning into riskier credit because it seems like the Fed's going to do everything they can to prioritize the soft landing, even over potentially making sure that the beast of inflation has been killed?
No, we're not leaning into credit. In fact, we're leaning the other direction just because the valuation. Now, you can't trade on valuation all the time, but the spreads are so tight. You might as well be in treasuries at this stage of the game when it comes to investment grade credit. Even high yield, you know, spreads are so low. Yeah, you can earn the coupon. You probably have a decent year, so we're still neutral, but we'd definitely not be leaning in at this stage of the game.
So where are you leaning in terms of treasuries? I mean, does this give you incredible conviction that we're going to get to a 3.5% 10-year, or 3% 10-year within the next couple of months?
Next couple of months is pretty aggressive, but I do think we get back, you know, towards the 3.5% towards the end of the year. So we think the main thing is going to be bull steepening. As the Fed does start to cut, you know, 10-year, 7-year probably hang in there in a range. We have fair value in 10-year around 380, 375. So we're pretty close to it now. Probably get a range around that level, around 4% for a while. But we think the main trend is going to be bull steepening.
Why it's steepening and why we're cutting, I think, is really important. If this is because inflation is coming in, great. And it's not because growth is collapsing, fantastic. Priya Misra on this programme yesterday of JP Morgan turning positive on credit. Turning positive on credit because she thinks there's this window right now to be constructive on risk assets because ultimately the Fed can cut because inflation is coming in and we haven't really seen a collapse in economic growth yet. Do you see that window as well to be constructive credit, even with the price of the story being pretty elevated?
Yeah, I think this scenario is realistic. It's just that the market for credit's already priced it in. And so to lean in now is to get aggressive maybe a little bit later than you might want to. Also, when we start to look at the default rates are picking up. We're not looking at underlying fundamentals for credit getting better, and the spreads are very tight. So what are you going to do with that? You're just going to rely on the Fed to cut rates. That's an interest rate play, not a credit play.
Is that another way of saying that you don't think we've paid the price yet for going from 0 to 550 on Fed funds?
No, I don't. When it comes to credit, I don't think that that's fully priced in. I think we're priced in Fed rate cuts and rescuing the economy and the credit cycle, and I think the jury's still out on that.
How concerned are you about a tick back up in inflation based on how the markets price things and based on what you think the Fed will do, not what they should do?
My feeling is inflation still comes down. I think we're in the camp that says that we're in a declining trend in inflation. I've never been in this camp that says, oh, the last mile is the hardest, or, it's going to stay sticky forever. There's just not a lot of empirical evidence to suggest that's taking place. And you have a very soft global economy, too. So we do think inflation is going to come down. And I think the catalyst for the Fed cutting rates is that, you've got real rates now heading towards, levels that are really restrictive. So I think that is going to be the motivation. And if they go in March, that'll probably be the reason why. But I just lean towards May because of the messaging that we're getting.
Tomorrow we get the ECB meeting, and we're talking a lot about the U.S. and U.S. debt. It has been the main game in town for a lot of people. Are you starting to shift gears? We're seeing, for example, in Europe, Italians yields coming in dramatically. We're seeing an incredible rush to risk there. Are you following that?
Yeah, I think that there are some attractive plays in Europe because of the likelihood that the ECB has to go sooner and faster than maybe the U.S., maybe the Fed. So I think there's a play there. We actually kind of leaned into emerging markets as well because a rate cutting cycle in the U.S. is often very good for EM, but you have to be really selective.
Well, let's talk about that selectivity. Even with the clouds over China right now, you've got China, big chunk of that part of the world, which is basically trying to stimulate demand for its own equities by apparently, and according to our report, and considering using money from state-owned enterprises offshore to then buy into the equity market through Hong Kong. Kathy, they're cutting the RRR rate all over again. We've heard this story a million times. What on earth can they do to stimulate demand in that economy?
I think there's some fiscal space there, and they seem to be not using that directly. They're doing it indirectly through the banking system. I'm not really sure why you'd want to re-lever the stock market rather than use fiscal policy. But I'll tell you, frankly, I don't spend a lot of time worrying about Chinese bonds because we don't.
Can you be constructive EM without spending much time being worried about China?
Yeah, because I think that if China takes any step towards stabilizing their economy and improving things and reducing rates, that's APAC countries should benefit from that, APAC EM, and we're seeing a lot of positive things happen in, say, Mexico. So there's some EM where there's some room for movement.
Lisa, we've talked about this a few times already this week. Engines for growth. US is okay, Europe's not great, China's really struggling. If you think about the global economy as a three-legged stool, two of those pieces aren't looking good at all.
Which is interesting from the fact that maybe the U.S. is truly diverging, and it's because of the tech story, and also because maybe there are other smaller engines that people keep talking about, whether it's Mexico or whether it's India or whether it's some of these other areas. The idea that China is kind of moving away from center stage as they isolate themselves has really been a narrative over the past, say, 18 months.
Hey, Kathy, it's good to see you.
Good to see you.
Thanks for being with us. Kathy Jones at Charles Schwab pushing back against the idea of a rate cut in March. Mike Gapen in the last 24 hours. He thinks we may well get one in a few months' time. In the next hour, we'll have a bunch of conversations with the former House Speaker Kevin McCarthy, David Rubenstein of the Carlyle Group, Andrew Hollenhorst of Citi on when he thinks the Fed's going to cut rates. Mandy Zhu of the CBO is going to join us too. That is in the next hour on Bloomberg Surveillance. Your equity market on the S&P 500 shaping up as follows. Equities look like this. We are positive by 0.4%. Yields are lower by 2 basis points, 4.11 on a 10-year. And in foreign exchange, the euro 108.94, positive by 0.4%. A week away from a Federal Reserve decision. The ECB is coming up tomorrow. And a lot of people still believe the ECB is going before the Federal Reserve. The third hour of Bloomberg Surveillance up next.
in a soft landing right now. We're looking at the data. The data looks strong.
Look at the data. It continues to surprise to the upside.
That even if the activity side of the economy is doing well, as it is, it's really the deceleration in inflation.
It's actually not that easy to get inflation down that quickly. It's going to take more time.
As we get into this year, I think a big stepping back thing is that we're going to see what kind of economy we have.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance alongside Lisa Abramowicz, together with Annmarie Hordern. I'm Jonathan Ferro. Your equity market on the S&P 500 positive again after 4 days of gains on the S&P 500, 3 consecutive all-time highs. The data so far in the last week has been good. Retail sales hot. Jobless claims lower, consumer confidence picking up, and then we start the earnings for tech. Netflix knocking it out of the park. Bramo, another record high in sight.
This is sort of the kicker to all of the hand-wringing over. Is it a problem? Does it make the market more fragile that the Magnificent Seven has driven so much of the gains that we've seen in U.S. markets? Turns out that's where the profit is, right? I mean, it turns out that essentially they are minting cash. The fact that they added 13.1 million new subscribers, that is the most since the heart of the pandemic, and now people have options like going outside versus during the pandemic when they didn't, and you can see those shares bouncing.
This always feels personal with you. Their stock is up by 9.9% in the pre-market, picking up again. More earnings still to come a little bit later this afternoon. So things are looking good, aren't they? Consumer confidence is picking up. The data seems to be okay. Unemployment's below 4%. Jobless claims sub 200K. AMH, you'd think this was very, very good news for the sitting president of the United States because it feels like it's going to be round 2 against Donald Trump.
Right. So it's good news on the economic front. Potentially the timeline is on their side. We saw that with the Michigan survey. Inflation is coming down. People are starting to potentially feel the economic effects that the Biden administration has been telling them they should be feeling. And the polls have been showing, well, actually, we're not. Now, maybe we're going into November. People are starting to feel better. And then the campaign last night puts out a statement saying, almost eagerly, we're excited to take on Trump because Biden was the only person who could beat Trump. Now, we should remind everyone, Trump only faced off in a general election against 2 people.
It's kind of bizarre, isn't it, when you put it all together? You've got the president eagerly awaiting another face-off with the former president, Donald Trump. At the same time, Nikki Haley's holding on. Is Nikki Haley going to keep holding on?
Well, the pressure's going to mount on her. And if you look at what she says, her sweet home state of South Carolina, she's behind 30, 40 points at the moment when it comes to former president.
I really think it's fascinating, the economic question. And we asked Gary Cohn in the last hour, why are people feeling bad if the economic data is so good? And I guess it comes down to, and what everyone's saying is just time. People need to adjust to 20% higher grocery bill. So when is sort of the statute of limitations on this? When do we say, okay, now inflation is not year over year, it's month over month and it's okay?
Gary nailed it. Cumulative inflation. It's the pain people feel over a period of time from 2020. It's not month over month, year over year, where we're going this year. It's about what's happened since 2020 and the sticker shock at a price level over the last 4 years. It's not going back. And this, to me, is really a key question. If anyone has a paper on this, please send it. But what is sort of the maximum amount of time that people have to live with inflation at a certain level before it becomes sort of normal and their wage increase to outweigh that in a more material way? Equity futures right now on the S&P 500 positive by 0.5%. Let's whip through the price action for you. Bond yields look like this, down by 2 basis points, 410.51. The euro a little bit stronger, dollar weaker, reclaiming 109. The Fed decision a week away. The ECB decision a day away. Coming up on this program this hour, Mandy Zhu of SIBO Global Markets on the rally in the equity market. Former House Speaker Kevin McCarthy joining us around this table following Trump's victory in New Hampshire. And Citi's Andrew Hollenhorst looking ahead to key inflation data out later this week. We begin with our top story. Stocks continuing to climb. Mandy Zhu of SIBO Global Markets seeing more room to run. Writing, quote, options market positioning is still biased towards further gains. Despite the S&P making new all-time highs, we're still seeing elevated demand for upside calls as investors position for further upside in the months ahead. Mandy, I'm pleased to say, joins us around the table. Mandy, good morning.
Good morning.
Why do you believe then, and let's build on this, the path of least resistance is still higher?
So, I mean, this is what the option market is signaling. It is what investors are actually putting money toward, is buying those upside calls. So couple things that stand out to us. Measures a skew in the options market, which looks at the demand for puts versus calls. That's at a multi-year low across all the major global indices, particularly for Russell 2000. So to go back to the question of, is this going to be a rally led by tech? Now, more and more, we're starting to see, beginning November last year with the Fed pivot, people playing for potential broadening out of that rally. So looking for upside in the Russell, because we have S&P at all-time highs, but Russell's still down 20% from its peak, right? So Russell's still in a bear market. So that's kind of where the potential catch-up is, and that's where we're seeing the most elevated demand.
How crowded is positioning, particularly not just in sort of long positions, but also in this broadening out trade?
Yeah, to give you a sense of how extreme some of the positioning has gotten, at least in the derivatives market, if you look at the spread between Russell volatility versus S&P volatility, that's gotten to basically a 10-year high if you take out COVID. Right? And that's very unusual because typically when Russell volatility is rising relative to S&P, that's usually during times of duress when people are pricing in more recession risk. This time, the entire bid to that vol is coming from the upside.
Given that, how priced to perfection is this? I just go back to the conversation that you had, John, with Greg Jensen of Bridgewater in Davos. But there is this question of how fragile are some of these positions to just one data point that comes out that's highly negative?
Yeah, I mean, I think everything is really dependent on the economic outlook. So certainly things could change and move around pretty quickly. And we do see in the Russell, at least, it is the most reactive on economic data release days, whether that's CPI or FOMC. So certainly I think that the macro narrative can change, but at least in the equity market, kind of everywhere I look, that sense of optimism in the soft landing story, that's definitely what is being priced in.
What do you make of what's happening with the Russell versus, say, the S&P? You've got the S&P at all-time highs and the Russell still climbing out of a bear market.
Yeah, no, I think for me, for Russell to really, well, the reason why it's underperformed is pretty clear, right? It has much more overweight the cyclical sectors, and obviously growth has been slowing. I think this expectation for Russell to outperform, right now it's driven by lower rates, it's driven by this Fed pivot narrative, but I think for it to really be sustained, to continue, you do need growth to pick up. So I don't think a soft landing is actually sufficient to get Russell outperformance. You actually really need to growth to accelerate, which, you know, given the outlook for this year, that might be challenging.
You keep going back to economic data. You don't talk about earnings. How relevant are the earnings this season?
Earnings are relevant, but what we see, and one measure you can look at to kind of get a gauge of how much is being priced for earnings is dispersion. Implied dispersion, the DSPX index, tells you how much is being priced in the next 30 days. And what we're seeing right now is implied dispersion is actually lower at the start of this earnings season than the last 8 quarters, so last 2 years. So in some ways, people are pricing in less moves on earnings, but I would say overall levels are still elevated. So don't write off earnings, but I think given the run-up in market, expectations have built such that the hurdle to get a significant move on earnings is certainly higher now.
As you speak, I just think about the risk and reward. And we were talking with both Michael Gapin as well as Priya Misra, and they were saying we have about a 65% chance of a soft landing and about a 35% chance of a hard landing. I know how you come up with these, 88.2 or 65.36, but if you take a look at what the options markets are showing, does it agree, or do you see a much higher probability of that soft landing being priced in?
I would say what is currently priced into to the option market is much more highly tilted toward the soft landing. So if you believe there is a significant chance or a meaningful chance of recession, then definitely I think there is value in looking at those downside puts. I think, you know, it's not just the measure of put versus call. If you look at measures of implied correlation, which is, you know, the measure that I always go to when looking at expectations of recession, because that is the one catalyst where it really drives correlation levels higher, right? In a recession, everything sells off together. Measures of implied correlation, forward expectations of correlation in the S&P, multi-year lows currently. So everywhere you look in the equity market, I would say it's really pricing in for that soft landing.
How much is this people hedging for the upside because that's where they got really beaten up versus hedging the downside? And then just their ownership has not changed that much.
I think that's a huge part of it. And I think that's the main story in Q4, right? Going into year end, that was kind of what, you know, I was saying. It's really a positioning story going to year end, the performance chase. But we're now you turn the calendar. We're starting at the beginning of the year, and that is still persisting. So I think part of it really comes down to sentiment.
Mandy, enjoyed this. It's good to see you. Mandy Zhu there of SIBO Global Markets. Let's get you an update on stories elsewhere this morning. Let's catch up with Yahara Hackers with your Bloomberg Brief. Hey, Yahara.
Hi, John. Donald Trump is inching closer to a rematch with President Biden. The former president comfortably beat his only remaining challenger, Nikki Haley, in the New Hampshire primary. That's a back-to-back win for Trump after claiming victory over Florida Governor Ron DeSantis in the Iowa caucuses.
She doesn't win this. This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night. She had a very bad night.
Shares of Netflix are surging in pre-market trading after the firm posted its best customer growth since its pandemic peak. The streaming service added more than 13 million subscribers in the last quarter of 2023, exceeding the street's estimate. Netflix recently gained rights to WWE show Raw as its first live event content. And more turbulence for Boeing. Alaska Air says it found loose bolts on, quote, many of its Boeing 737 MAX 9 aircrafts, the CEO said in an interview with NBC. It comes just after United Air dropped Boeing's MAX 10 from internal plans without canceling its order. And that's your Bloomberg Brief. John?
Yahara, thank you. That story gets more and more shocking. More on that story a little bit later this hour. Up next on the program, Trump on the cusp of a third GOP nomination.
This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night.
This race is far from over. There are dozens of states left to go.
That's next on the program. Just around the corner, the former House Speaker, Kevin McCarthy.
When will the ECB decide to cut rates?
We are on the right path, but I'm not going to shout victory.
Bloomberg Television brings you the breaking news and detailed analysis after ECB President Christine Lagarde's press conference.
The wages issue is what I think the ECB is really focused on.
June is our base case.
There is still a 50-50 chance of a rate cut coming just slightly before that.
In many ways, they should have been cutting already early to stimulate growth.
The ECB decides. Thursday on Bloomberg Television.
1 hour, 16 minutes away from the opening bout. 4-day winning streak on the S&P 500 could well become 5. Equity futures on the S&P positive by 0.6%. Yields a little bit lower. We're down 2 basis points on a 10-year, 410.51. Under surveillance this morning, Trump on the cusp of a third GOP nomination.
You know, we won New Hampshire 3 times now, 3. This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night.
New Hampshire is first in the nation. It is not the last in the nation. This race is far from over. There are dozens of states left to go.
Here's the latest this morning. The former president defeating Nikki Haley in the New Hampshire primary. Trump cruising to victory by 11 points with over 90% of ballots counted. Haley trading by over 30 points, Annmarie, in polls heading into the primary in her home state of South Carolina next month.
Yeah, in the home state of South Carolina, it looks like she's up a very steep battle, Jonathan, with you have the former president up 30-40%. But when it comes to independents, Greg Valliere shows that this is potentially, writing this morning, where it's going to be a vulnerable spot for Trump. The major takeaway last night was Trump's potential weakness in November. There's no question that Trump has an enduring base of voters, but that base may not be sufficient to win the general election. He also continues to write that there is one area that's tilting towards Trump, and this is immigration. But what does this mean now, what's happening in Congress? Are Democrats going to be able to ink this deal? Because that would give a win to Biden, even though Republicans are definitely the ones that want something on this issue.
Let's start the conversation right now with Kevin McCarthy, former House Speaker, joining us around the table in New York. Speaker, good morning to you.
Good morning.
Let's get into it. Do you just assume Nikki Haley's going to leave this out and it's going to be Trump versus Biden all over again?
Yeah, I mean, think it's about 30 days before South Carolina. She's losing South Carolina. At the end of the day, I do not think Nikki Haley wants to lose her home state that badly. I think she'll probably pull out. I think it's difficult for her to win the majority. But the one advice I'd give to President Trump, it's about addition, not subtraction. His speech in Iowa was much different than his speech in New Hampshire last night. And what I would do if I was him, I would draw Biden into the campaign. Because every time Biden goes out, he shows his weakness. Biden cannot fix his biggest problem, his age. Immigration has now overtaken the economy. And the problem here is for Biden is he created it. There was no new bill that passed that created this rush of people across our border. It is just his administration policies. So he doesn't need the House and Senate to work out an agreement. He can do this administratively. So he's in a really bad position. He won last time by hiding. He cannot hide. So if I was Trump, I would start pulling Biden out. I would make the issue. Remember, a re-election is a report card. Your first election is aspirational. What are you going to do? Now there's going to be a report card on what you did, and no president has walked into a re-election in modern history lower than this, even Jimmy Carter.
Well, the former president has got to do something about attracting independents. Any evidence that he can do that based on what you've seen in Iowa and New Hampshire?
You can, because the challenge is looking back home. You sit here and you talk about data, what's happening in Wall Street. Voters are going to be voting on the passion of what's happening on Main Street. And if you look at what those interest rates are for a small business to get a loan at 12%, nothing's happening. So that's not going to change that drastically between now and November, and they feel it. They feel inflation when they go there. They know what the price of gasoline is. They see the border. Think of this. There's not one Republican in Congress elected from Massachusetts, and Massachusetts has a state of emergency based upon the southern border. You're here in New York. What does the mayor and governor say? Their number one issue is immigration. What is Illinois, a very big blue state governor? He's crying, don't send any more buses.
So on immigration,
stuff.
with Trump basically now being the de facto nominee, is that going to paint the fact that maybe this deal can't get done? Because why would Republicans in the House give Biden a win ahead of November?
Well, if you're elected, you want to solve a problem. The hang-up isn't with Republicans. The hang-up is with the president. Will he change his administrative policies that he put in place not by any vote? And he is holding back doing that. In the House, we have a very small...
I'm talking about the border Ukraine aid package, the supplemental that the Senate is working on.
Yeah. Let's talk border. Ukraine and supplemental is different. Do I think it gets done? I think it's very difficult. Every day that progresses, less likely. But remember, in the House, you passed a bill. When we were Speaker, we had a 4-seat majority. Well, we passed the strongest immigration bill, border security, that we've ever done. We haven't been able to do it when we had a 30-seat majority. And what you've watched, that sat over in the Senate, they have not acted. That's a Senate majority. The president hasn't taken any administrative action. You've got now the president even saying the border is not secure, something he hasn't said in a long time. He's got his own secretary saying something different.
All right, so if you think a supplemental doesn't get done, what about actually funding the government? How many stopgaps is it going to take?
Well, I think it's a mistake. Look, I did a continuing resolution to be able to solve this before the end of the year. The numbers are already there. If they continue where they are right now, and it's the far right, the Freedom Caucus of the Republican Party holding it up, you spend more money and you lock in Pelosi's policies. If they would just start moving the appropriation bills, do this now, they would spend less money, they would put more conservative policies in, and there would be a victory. So they need to focus in the next month to get that done.
Let's put the Freedom Caucus to the side for a second and talk about the main frontrunner for the Republican Party, Trump, and talk about some of his policies. Do you think that a 10% tariff, blanket tariff, is a good idea?
Look, the president has always been very open to think that America has lost in this. And I think he's changed the opinion of America when it comes to China. So that's not going to be the number one issue people are voting on. They're going to be voting on the economy, on immigration, on gas prices.
But a lot of businesses are going to be voting with their money. And they don't want to see that. They think that it's a tax on the U.S. consumer and that the person who's going to really experience it is the person who's going to Walmart, the person who's going to Target. Do you agree with the 10% tariff?
Look, you're thinking this is going to defeat President Trump going in. It's not going to defeat President Trump going in. The president he has an American first policy, whether you agree or disagree with it. He has transformed what you look at Republicans and Democrats looking at China itself, not to have an advantage over America.
When it comes to the general election, we already saw it yesterday. Kamala Harris, President Biden, they're out talking about abortion. How difficult is this issue for President Trump if he wants to win these independents in the 7 swing states?
Okay, you just talk about the rally they had to talk about abortion yesterday.
Because they want to make it an issue.
Yeah, so how many times were they interrupted during this rally about abortion to go after Republicans? 14 times. 14 times the president was interrupted in a staged event that he thought he could attack Republicans about something. This is why I tell President Trump, engage President Biden. Go to a campaign with him every single day, because his policies have failed. We've had 5 embassies he had to evacuate. We have war. We've got now the axis of evil like the 1930s. We've got inflation. You have all the things that Trump can say you did not have under his policies. So yeah, abortion could hurt, but let me tell you one thing too. Abortion was on the ballot last time when I was leader. We won 5 seats in California and 5 in New York. We won in Oregon. We won in Arizona. You've got to take the issue head on, but I firmly believe when the economy is this bad, when you've got immigration just strong, that outweighs
Hold on a second.
the other
The economy,
issues.
a lot of people say, is very good. What do you mean it's bad?
Well, just what I made the point before. You talk about data and you say the economy is better. Go out to the American public. Leave New York and go out and listen to where
on
the
Friday, so that people are starting to feel better about the economy. Michigan consumer sentiment. Gasoline prices in New York now below $3 a barrel.
It's $5 in California.
Well, that's also some state issues when it comes to taxes. You know that.
All right, there's homelessness everywhere you go. That's a Democrat-run state. People feel something they haven't felt before. If you look at a poll in California, you look at independents think immigration is a #1 issue. Even Democrats, it's a 70-30. If you look at Democrats themselves, because remember, when you run for president, you want to bring your base and you want to expand it. Well, the majority of Democrats think President Biden is too old. If you want to talk data, if he gets reelected, there's a higher probability that he doesn't finish out his term based upon his age and the vice president comes in. She's not very popular for the ticket itself. You've got internals, people still talking about. You've got people who ran Obama's campaign openly saying, if he's on the ticket, we lose. You've got Democrats worried if they have to run under his ticket. You've got those who've run for president before saying you should switch him out. That's not strength going in. That's why I believe the sooner we get 2 individuals debating, it's a benefit to the country.
Well, let's see if even both of these individuals get on the stage and debate. But Speaker McCarthy, before you go, we have a few issues we have to ask you. One, do you think Speaker Johnson is going to get a motion to vacate like you were suffered and lost your gavel?
I don't think you can. Look, that was 8 Republicans. One person made the motion. It was 8 Republicans, so he had support in 94. But you watch what transpired after that. You went a month and you couldn't find somebody. And the top of the people who had the capability of doing the job got knocked out. So I think internally people look at that. And it was really based upon one member who moved it. He didn't want an ethics complaint to come forward. And I saw ABC yesterday, it's coming forward. So he's willing to disrupt the entire government to try to protect what he has done privately he doesn't want out. That's going to come out anyway.
I don't think enough people know your story. From flipping cars as a student to winning on the lottery, I think the first lottery, and buying a deli franchise. I think this is really important. Do you think that your party has left behind that traditional conservative vision of equality of opportunity and upward mobility? Do you think that the former President Donald Trump understands the essence of being a conservative in America?
Well, I think there's a debate about conservative, but I think he understands the entrepreneurship behind it. I mean, my story is, too. I grew up in the town of Bakersfield. Father, a firefighter, moved furniture on his days off. I didn't have money to send me away to college, so I went to community college, but I always had a work ethic. So I met a guy that had a car dealer's license. He happened to own a liquor store, and I paid him $100 to take me to the LA car auction, and I flipped cars. Now, it was illegal, but I didn't know it at the time. But I would go visit my friends who were away at college, and this weekend I was going to go to San Diego State, right? So I go to the grocery store to cash a check. The day before the lottery started, so I buy a lottery ticket, and I win the lottery. Now, it's 1985. It's only $5,000, but this was before Biden inflation. So it was something, right? And so when I came back, I took my folks to dinner, and I took the majority of the rest of the money, and I take risk. I put it into one stock. Yeah. I made 30% on my money in 6 weeks. At the end of that semester, I took a break, and I tried to buy a franchise, but they wouldn't sell me one because I was only 20 years old. The other thing, I never give up. So I opened my own deli, not a franchise, and I did pretty well. And at the end of 2 years, I sold it because I wanted to finish college. I now had money to pay my way through college.
So I imagine you're not going to open another deli. What are you going to do now?
Well, the end of the story is...
Cabinet secretary?
No. There was the local congressman. He said, be an intern in Washington. I didn't know the man, but I thought he'd lucky. So I applied, and he turned me down. But I ended up getting elected to the seat I got an internship for. Look, I believe the very best in America. That America is more than a country that's an idea. And we need good people in there to serve. I will do whatever to help. But I'm going to go back to my entrepreneurial roots and
my
do some things
Bloomberg's
to help
lighting
the
up.
economy.
Got 5 seconds. What stock did you buy?
You know, it's back in 1985. It's called Fur Vault.
Fur Vault.
Remember, this was the day of Dallas. They were selling furs to Neiman Marcus and others. So.
Live from New York City this morning. Good morning. 4 days of gains on the S&P, 3 consecutive all-time highs on the S&P 500. The benchmark in America better than good. On the Nasdaq 100, a record high at the close yesterday, up another 0.9%. The Russell doing okay as well, better than okay, up by more than 1 percentage point this morning, up by 1.16% on a Russell 2000. In the bond market, yields look like this: 2-year, 10-year, 30-year. Yields lower by 3 or 4 basis points, 4.09% on a 10-year, down by 6 on a 2-year yield, 430.35. We're down by 3 on a 30-year, 433.29. And just to finish on foreign exchange, the ECB tomorrow, the Federal Reserve a week today. In the FX market, the euro 109.10. We're positive here by 0.5%. Under surveillance this morning, Donald Trump on the cusp of a third GOP nomination. New Hampshire voters handing him a decisive victory with over 90% of ballots counted, making a Biden-Trump rematch all but likely. Former UN Ambassador Nikki Haley vowing to stay in the race, looking ahead to the next primary in her home state of South Carolina in February. The former House Speaker Kevin McCarthy on the programme just moments ago, suggesting that maybe Nikki didn't make it that far.
No, and he thinks that the sooner everyone can get around Trump, the better it'll be, because he thinks Trump needs to be talking about not Nikki Haley, but needs to be talking about Biden. He really, the speaker, former speaker, really thinks Trump needs to be bringing Biden out now and going up and against him on policies. Interesting, though, Jonathan, one thing the speaker certainly didn't want to talk about was abortion. And this is going to be a main driver for Democrats to want to get out votes.
This goes back to something we've talked about in the last couple of days. Traditionally, we'd sit here on the programme and say it's all about the economy. It's always about the economy. But if you think about more recent votes, particularly the midterms, it's been about other issues. Abortion being one issue, immigration being another.
Honestly, I was taking a look at a couple of different research pieces on why people don't feel better about things, considering that all of the economic data is great. And it's not just the fact that inflation cumulatively has been high. It's also the war. It's also the biggest amount of strife within the American population in a long time. This kind of harkens back to 1968 with a similar kind of feel.
Yeah, absolutely. Foreign policy, while it's not the real reason why Americans go out to vote, it's certainly an overhang, especially when it comes to the youth demographic. Biden was interrupted yesterday. The former speaker was correct. But about the war in Gaza, it wasn't about abortion.
The scars of inflation. I just want to pick up on this. It's amazing that we can have people come on the programme and talk about how bad the economy is and still connect with voters when unemployment's south of 4%, jobless claims is south of 200k, the equity market's at a record high on the S&P 500 and on the Nasdaq, and growth as recently as the third quarter was something like 5%. And you can do it because there are so many people in this country still scarred by the inflation of the last few years. Even if you can sit here and make the case that disinflationary trends have emerged and will continue and inflation will slow back towards 2%, you can't get away from that issue.
Disinflation is a hard story to tell. And honestly, I think that that's the key. At this point, though, I don't understand a lot of the sentiment data, and we are seeing it inflect higher because right now what you're seeing is otherwise incredible strength. I mean, as these earnings come out, people signing up for Netflix in this incredible way. Just the people have money to spend, and a lot of people said, we were in the depths of the pandemic. We actually have climbed out, and that, the base case right now is a soft landing, even with the inflation that we've seen and the fact that it's going to come down.
You mentioned Netflix. Let's look at the stock in the pre-market. Absolutely flying, surging in pre-market trading after reporting its best quarter of growth since the pandemic. 13 million customers signing up in the fourth quarter thanks to a cheaper ad-supported option and a crackdown on password sharing, and management hinting at more price hikes ahead, saying this: as we invest in and improve Netflix, Annmarie, occasionally we'll ask our members to pay a little extra to reflect those improvements.
I think it was thanks to David and Victoria Beckham.
You mentioned that.
Yeah, I think that was this blowout documentary they had. It was one of their top rated. People loved watching it. My parents watched it and then signed up for Netflix.
13.1 million people decided David Beckham, that's it, I'm in. I mean, there's a lot there. I don't know about that. I'll let you have the David Beckham beat, but I am curious whether we go forward and we see that this sort of password sharing crackdown works for others, or if this is just Netflix and the sort of investment that they've done in content.
Well, clear two structural issues that have helped boost this name over the last few months. The ad tier is one, and the password sharing clampdown is another. And it's interesting, after you absolutely smash estimates for every region on the planet, that we're talking about price hikes now. If that's where the revenue growth is going to come from, what's it going to be? Actual subscriptions or price hikes on existing subscribers?
And if they can have a bigger base to hike prices, then they're in good shape. All I can say is the advertising thing. Would you actually pay more to not see an advertisement at the very beginning for a couple of 30 seconds? Seriously?
Waste of time.
Really?
Yeah, don't you do that?
No, I don't.
Yeah, ad-free every single time.
Really?
Yeah,
I'm
every
actually
single time.
curious. I want to see what different people, how their marketing techniques are
I just
working.
don't want to waste time watching commercials.
Time is
Anyway,
valuable.
That's just me.
Okay, all right.
We are the same person. It's okay.
It's
You're allowed
okay.
to have a different
I guess
preference
so.
on the
All
issue.
right.
I think we'll all share the same opinion on this story. Loose bolts were found on many of Alaska Air's Boeing 737 MAX models, according to the company's CEO. The findings come as airlines conduct inspections of the jets following a mid-air panel blowout on one of Alaska's flights earlier this month. The Alaska Air CEO telling NBC he's angry and frustrated and wants to know what Boeing is doing to improve their quality programs. I have to say, I know it's a word that's overused in this story, but just another absolutely shocking element to this, that they've gone away, they've checked the planes, and this is what they've found.
Okay, this is so unusual that you have executives, top executives of airline companies coming out and publicly or even semi-publicly questioning the safety of a supplier of aircraft that they use. To me, this is a game changer. And I have to wonder if this amping up, I mean, honestly, it's so graphic. The bolts are loose. I mean, this is like, not exactly what you want to hear before you get on a plane.
No, and I know you've been checking whether or not you're flying Boeing or Airbus. I took an Alaska Airlines flight in November from San Francisco to JFK, and I looked back last night, and it was one of these Boeing jets, and I was quite concerned. But
retrospectively?
Yeah, retrospectively, I was concerned about the aircraft I took, and I'm, said my prayers. But in all seriousness, a Boeing CEO is going to be in the hot seat today. He's actually on Capitol Hill. Bloomberg News reported going to be meeting with some senators, and they're going to have a lot of questions for him.
That's the latest on Boeing and Alaska Air. Let's turn to the data. Key economic data due out later this week, including fourth quarter GDP and core PCE. Andrew Holdenhorst of Citi looking ahead to the data, saying this: while 2% growth and 2% inflation will look like another quarter of Goldilocks, data for the Fed, we remain sceptical that these soft landing dynamics will last. Andrew Holdenhorst joins us now for more. Andrew, let's get into that. What are you anticipating here? Re-acceleration of inflation supported by the easing of financial conditions in the last few months? What is it?
Yeah, it's interesting because we actually have risks on both sides now, I think. What we have on the activity side is the lagged effect of higher interest rates that we were starting to see towards the end of last year showing up in the data, particularly on labor markets. You have some signs that labor markets, which have softened, are just going to continue to soften. Now you have this really complicating factor of easier financial conditions, to your point, and that is reaccelerating some sectors of the economy, and we're seeing that in housing in particular, and that gets into the inflation issue, where we have shelter prices that are still rising rapidly. Even the official measures of shelter price inflation have not slowed as much as economists were forecasting. And then you look at house prices. House prices are rising 8 to 10% annualized. So there really are risks on both sides of the Fed's mandate. And I think that the risk is that we see this data and say, okay, 2% growth, 2% inflation, that's what we were looking for. We're getting it for a quarter. It doesn't mean that we're necessarily going to continue to get it.
Andrew, you've been warning about inflation being maybe a bit hotter than people expected for quite a while. Have you adjusted your view, though? Do you kind of come to the same kind of conclusion that even if on the margins you might have a bit hotter inflation, it is coming down enough for the Fed to cut rates more than you thought maybe 6 months ago?
Well, we've been surprised at how quickly core inflation has slowed. We actually haven't changed our view too significantly on when the Fed would start cutting interest rates. We've always had them cutting interest rates around the middle of this year, which was both on the idea that inflation would slow and that activity would slow. The Fed, like we were saying in that note, they're going to see this inflation that, core PCE inflation, if you focus on this, one particular measure, 6-month core PCE inflation is running below 2%. But that's where you get into, are you looking at a narrow measure of inflation, or are you kind of looking at more broadly what's going on with inflation? If I look at core CPI, that's running a lot stronger than core PCE. Now, it tends to run stronger. But if I look at the service sector in particular, that's where you're really seeing continued strength, and wages that are the most important cost for the services sector are still rising 4 to 5% annualized. So I really don't think that we're on a sustainable path to 2% inflation. Fed officials are saying they're not sure we are either, but then if you kind of listen to their full comments, it sounds like they're pretty convinced. So I think they're going to be convinced enough to cut interest rates. But are we really headed back to 2% inflation? No, I don't think so.
Given that, are you more skeptical of a soft landing than everybody else, given the fact that maybe the Fed's going to either have to reverse course and hike rates back up or cut rates more slowly than people think and kind of boil the frog?
Yeah, so Chicago Fed President Goolsbee calls this the golden path. And this quarter, we're kind of on that golden path, right? We have growth that's slowed nicely from the third quarter. We have inflation that's slowing down. But I would call it a narrow path. There is a path to a soft landing. It is possible that inflation just comes down and the economy cools nicely and we don't go into a recession. But is that the likely case? No, it never has been likely. It's still not likely. Of course, markets are going to feel that it's more likely right now because that's what we're seeing in the data. A lot of the slowing in inflation has been slowing in goods inflation. That doesn't really have a lot to do with slowing down the domestic economy. That has to do with what's happening globally. And now look what's happening globally. We have disruptions in the Red Sea. We have shipping costs that are rising. There's no guarantee that goods inflation is going to slow further. It may even pick up from here. And then we still have the domestic issues in the services sector and the shelter sector.
Andrew, what's your latest work on that? Developments in the Red Sea, tension, not just there, but also some of the traffic through the Panama Canal has slowed for a very different reason. Have you done any work on that recently, on whether that's going to show up anytime soon?
Yeah, that's right. There's some good work that the IMF did on this actually some time ago in response to the increase in shipping costs that we saw during the period of the pandemic. And now we're seeing some of those same shipping costs rise. Now, to your point, John, this is not as generalized as we saw at that point. Red Sea is going to be more important for trade between Asia and Europe. As a U.S. economist, yes, that shows up for the U.S., probably not as directly as it does for Europe. But then you also have this issue with water levels, drought in the Panama Canal that's also restricting trade. So the IMF puts the numbers together. They get a few tenths of a percentage point on inflation. I think that's a reasonable estimate for how much higher inflation you could see. And so not a total game changer. But this idea that inflation is just headed down, it's one reason that it could be headed back up.
Andrew, just quickly, just to wrap it up, looking ahead to next week, just a week away from that news conference with Chairman Powell, what's the number one thing that you and the team are focused on?
What we really want to understand is this a Fed that's looking to cut rates as early as March, or is this a Fed that's waiting to kind of take their time and move carefully, like Governor Waller said? I think we're going to hear Powell more in this careful camp, which would indicate more of a June rate cut. But let's listen closely. These things are changing quickly. If he sounds more dovish, then those expectations could be moving into May or March.
Andrew, thank you, sir. Andrew Hollenhorst there of Citi. Kind of on the fence a little bit there towards the end, Bramo.
Yeah.
I want to get that first cut.
I mean, that's the issue, is that as much as people push back, it seems like the Fed isn't pushing back enough to get that March rate cut really priced out of the market.
That decision, 1 week away. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Authorities in China are making another attempt to boost the economy, with the country's central bank cutting the reserve requirement ratio by 50 basis points. The move becomes official next month in a bid to free up lending and cash. China's government is also mulling a $278 billion rescue package for stock markets as growth worries continue. Tesla is telling suppliers it wants to start production of a new mass-market EV midway through next year. That's according to Reuters. Currently, Tesla's cheapest car starts at almost $40,000, but this reported model would start well short of that. The company will report earnings later today, with the stock down more than 15% to start the year. And more woes for Boeing. The FAA says a wheel fell off a 757 jet on Saturday at Atlanta's Hartsfield-Jackson Airport. According to a preliminary report, a Delta flight was preparing for takeoff to Colombia when, quote, a nose wheel came off and rolled down the hill. More than 170 passengers were aboard and had to deplane. No one was hurt, and the FAA is still investigating. That's your Bloomberg Brief. John?
They've got a lot to investigate, haven't they? Yahara, thank you. Up next on this programme, the future of energy.
We actually are very concerned that the larger global effort to fight climate change is missing a major focus on developing and emerging economies.
That conversation coming up next. You're watching Bloomberg Surveillance live from New York City this morning. Good morning. Live from New York City, good morning. Your equity market positive by 0.5% on the S&P 500. Yields lower by 2 or 3 basis points. 4.0993, a week away from a Fed decision with equities at all-time highs, Lisa, for a third consecutive session yesterday.
And really, while this has been driven by big tech, as we were hearing from Mandy Zhu earlier, this idea that people trying to lean into the Russell 2000, that sort of rotation story, just a little bit more as we think about what a soft landing looks like.
The Fed a week away, the ECB about a day away, the euro at the moment about 109 against the dollar. Under surveillance this morning, the future of energy.
We actually are very concerned that the larger global effort to fight climate change is missing a major focus on developing and emerging economies. 75% of all future emissions will come from 81 countries that today are classified as housing more than 3 billion people that live in energy poverty. We're trying to change that pathway for those billions of people to focus much more on renewables.
You can watch more of David Rubenstein's interview with Dr. Rajiv Shah, the president of the Rockefeller Foundation, tonight, Lisa, on Peer-to-Peer Conversations, 9 p.m. on Bloomberg TV.
The conversation has shifted around renewables, and I think that it's important to reflect that now people are talking about the practicality of it, and this really is important to discuss ahead of Tesla earnings later today. The head of a UK insurance company, Carl Schuker of Howden, was telling Bloomberg News, and this really speaks to the practicality of this. You've got length of repair times going up for electric vehicles. You've got the cost of the component parts going up. And you probably see more EVs written off because residual values are particularly low at the moment. And this is the reason why they are charging drivers twice as much to insure electric vehicles in the UK. So here's the question. It's not a matter of if people are going to shift their habits. It's a matter of when, and it's a matter of how they can make the financials work. And that's really been the massive discussion in a lot of renewables.
This came up a lot, I think, to start the year. This is not necessarily about changing objectives and the ultimate destination.
Correct.
It's about the speed we get there. I think you've noticed that with Hertz in the last week, and Ford has had reality check after reality check about demand for some of these vehicles.
And we've seen a much more practical tone, which is a reason why when we hear people talk about these highfalutin goals, there is an underpinning of practicality to it, which is a reason why someone who's really a pioneer in this is really compelling to talk to about investment as well as some of the hang-ups.
Let's catch up with David Rubenstein, the host of Peer-to-Peer Conversations and co-chairman and co-founder of the Carlyle Group. David, sir, it's wonderful to hear from you, as always. I just want to get into that conversation that you've had, and it's going to play out a little bit later. We've all heard of the Rockefeller name. Talk to me about the work of the Rockefeller Foundation. What were you focused on?
The Rockefeller Foundation is more than 100 years old. It has an incredibly illustrious name, of course. It's not as big as the Gates Foundation. The Gates Foundation is by far the biggest of these type of foundations. But the Rockefeller Foundation has a terrific name, terrific staff. I interviewed Raj Shah, who for the last 6 years has been the CEO of the Rockefeller Foundation. And what they're focused now on is climate change. They've done many other things throughout their long history. Right now, climate change is what they're working on, particularly in the emerging markets. And their hope is to get partners who will help them develop renewable energy sources for many people in the so-called emerging markets. And that's what their focus is now. And Raj Shah is an incredible individual, the son of Indian immigrants. He has an undergraduate degree from University of Michigan, a medical degree from the University of Pennsylvania, but he decided not to practice medicine. He initially went to the Gates Foundation, worked on global vaccines, then was the head of USAID under President Obama, and now is the head of the Rockefeller Foundation. Very impressive individual.
David, as an investor and also as somebody who has conversations with a whole host of luminaries, how has the conversation around climate change shifted away from sort of, these big pronouncements and massive steps and the nuts and bolts of making it economically feasible?
Well, of course, almost everybody's against climate change or wants to do something about it, but getting it done is proving to be harder than we'd like. Obviously, the recent COP28 meetings had some progress, but we have to recognize that in your lifetime and my lifetime, we're not going to make gigantic progress. It's going to take many decades, if not a century more, before we really get to the point where we want to be. We have goals, of course, to get to net zero by 2030 or 2050, depending on the circumstances you're talking about. But it's going to take a long time because so much of the carbon is already in the atmosphere and isn't going to dissipate for decades. So we need to change people's habits, but it's very difficult to change people's habits when they don't see the benefit right away. Very few people change their habits because their great-grandchildren are going to benefit from it, and that's the dilemma we all have now.
David, what Raj is doing now with climate really was what he did with global hunger at U.S. aid. How much does global hunger still impact what he's doing at the Rockefeller Foundation?
Well, the Rockefeller Foundation has had a long history in that area, and they backed Dr. Norman Borlaug, who developed the miracle seed that helped revolutionize the way agriculture is done around the world. And they've had a long history in trying to make sure that people have enough to eat around the emerging market countries. But that's not their main focus right now. Their main focus right now is climate change and trying to make certain that in so-called emerging markets, people have access to energy. Many people don't have access to real energy now, but particularly renewable energy, which they think will be much safer and much better for the world.
David, before we let you go, I got to say, as one of the founders of one of the biggest private equity companies in the world, do you believe in this idea that we're heading into a soft landing and that this year is going to be the start of a new cycle?
I certainly hope so. I think we've kind of gone past a likely hard landing. Everything can always change. The world's never certain of where we're going to go. But right now, I think the Fed has done a pretty good job of getting us to a soft landing. The question really is, when will the Fed begin to cut interest rates? Nobody really knows. My own view is that they probably want to do some cuts before the presidential election is in high season, so they won't be accused of helping the incumbent party. But also, they want to make certain that they don't have to reverse themselves. They don't want to start cutting rates and all of a sudden inflation comes back and they have to change their position. That would be very bad for the Fed. So they're watching it very closely. I suspect we'll see something out of the March meeting.
You expect the potential Fed rate cut in March, in other words?
I suspect it's something on the table, but it won't be a massive one. But I think they recognize that if they wait until the fourth quarter, or third quarter, I should say, it might be a little bit in the political season. So they probably want to get any rate cuts out of the way in the first and second quarter.
How many rate cuts are necessary to really reignite market activity? Are you basically saying, all right, that kind of March rate cut and sort of front-loading it is going to explode the scene on deal making?
Well, the market has already anticipated this. So if the Fed were to disappoint us, it would be not a good thing, I think, for the markets. But I think the number of rate cuts is less significant than the level of them, of course. And we don't know whether they'll have 25 basis point rate cuts or 50 basis point rate cuts, as they did in increasing rates. But I suspect they'll put their toe in the water with a 25 basis point cut in the not too distant future. That would be my guess. But again, I'm not really at the Fed meeting, so I can't really say for certain.
Well, we appreciate your guest, sir. Thank you very much. David Rubenstein there of the Carlyle Group. Looking forward to the programme a little bit later on. They want to avoid being political, so they've got to make political considerations. It's always the tricky part of all of this, Bramo, when it comes to election year.
Honestly, a lot of people, and we heard this yesterday from Priya, this sort of conflict. They're not political. They don't want to do this. They shouldn't let it affect things. Will it affect? It's so unclear. I mean, this is the tough thing because they're either political or they're accused of being political. There's sort of no winning here.
Also, remember what happened in December. President Biden came out and said we're in a sweet spot right now in the economy, and the Fed should not continue on their hiking path. Everyone thought, was he signaling to Jay Powell to ease it off and potentially give me a cut going into November? I mean, that's what Wall Street was asking.
I think it's all conspiracy theory. I don't buy that. I think that they're trying. I think the hard thing is you cannot extricate a political cycle from the economy. And I think that's the really hard thing, considering that people we hear every day aren't going to be doing big deals before it because of the uncertainty. So I just think it's very tricky to sort of assume that you can parse these two things in perfect way.
You can't ignore it. You can't ignore it at all. Coming up tomorrow, you can't ignore this. Stacked programme on Bloomberg Surveillance. Virginia Governor Glenn Youngkin, Senior White House Advisor Amos Hochstein, Paul Taubman, PJT Partners CEO, and Deutsche Bank Chief US Economist Matt Lazzetti. All of that coming up tomorrow, a week away from a Fed decision, a day away from an ECB call, and President Lagarde. Round 3 for President Lagarde in the last week. What did we say? It's the third news conference of the last week.
Yeah.
Round 3 comes up tomorrow. We'll take that in full on Bloomberg Television for you. In the equity market right now, going into the opening bell, 35 minutes away. Equities positive. 4-day winning streak could well make this 5. Up 0.5% on the S&P. Bramo, all-time highs yesterday and record highs in sight this morning.
What I'm watching is definitely Russell 2000, how much it's broadening out, in addition to tech earnings continuing to deliver massive amounts of cash to edify some of the rally we've seen.
Live from New York City this morning. Good morning. This was Bloomberg Surveillance.